We are live.
Okay.
Please go ahead.
Yes. A very good afternoon and a warm welcome to Honorable Chief Guest, eminent guest speakers of inaugural session, chairperson, expert panelists of technical session, ASSOCHAM Presidium, and dear participants from media, industry, and corporate all over India. In the view of impact of COVID-19 and to deliberate upon the key concerns, opportunities, and growth of the leasing sector, as well as for co-creating an efficient, fairly competitive, and healthy sector of the economy by bringing together the stakeholders of the entire leasing value chain, the ASSOCHAM is organizing India's second global summit on leasing and hire purchase. At the outset, I would request and invite Mr. Vinit Agarwal, Senior Vice President, ASSOCHAM and Managing Director, Transport Corporation of India Limited, to deliver the welcome address. Mr. Vinit Agarwal.
Thank you, Mr. Tambe, and good afternoon to everyone. General Dr. V.K. Singh ji, Honorable Minister for Road Transport and Highways, Mr. Amitabh Banerjee, CMD IRFC, Srimati Vandana Agarwal ji, Senior Economic Advisor to Ministry of Civil Aviation, distinguished panelists, friends from media, ladies and gentlemen, a very good afternoon to you and heartiest welcome to all our distinguished speakers and delegates for this essential platform today. My special thanks to General Dr. V.K. Singh ji, who has taken time out to come and join us for this webinar. We all know that the current times are very challenging, but also we can see that various opportunities are also emerging at the national level as well as the global level. In this context, the Government of India has taken several measures to get the economy revived and moving, and also encourage foreign investors to look India as a potential to bring their global value chains. COVID has also disrupted businesses, whether it is large or small, in many ways. As companies learn to live the new normal, there is a lot of realization of the acquisition of capital assets in time to come. Businesses will find it much easier to connect the payment obligations to their revenues so as to have a minimum stress and maximum focus on operations. Businesses are preferring the current topic of this particular webinar, leasing or hire purchase options to save capital investments. Leasing provides the users of capital equipment a way to acquire assets, keep the businesses asset light. It is also a way to convert capital expenditure into revenue expenditure and is a perfect fit in this current environment. There are several reasons why the conditions for leasing and hire purchase are more than attractive than ever. Firstly, it's clearly the current market situation where people don't want to make a lot of direct capex investments. Secondly, a big change that had happened in a few years ago was GST. With GST coming about, the taxation elements helped in ensuring that everything that is leased, the input credit is also available, versus it was only a cost in the past. The third reason is that the lower cost of funds means that the overall attractiveness from a pricing perspective has dramatically improved. Fourthly, various new alliances and agreements have started to happen, which provide a one-stop solution to customers and clients, whether it is between manufacturers and NBFCs of various entities. And more importantly, recovery systems have become better and with more data being available, either through social media, AI, ML, etc. However, there are some things that can be done, sir, and that how can we improve this, not just the nitty-gritty of the sector, but as a user, as a company that has grown because of hire purchase in the last several decades. We face a lot of similar small issues which can be taken care of. Can we look at digitizing all the paperwork that has to happen related to leasing or hire purchase? Today, any single hire purchase agreement has a minimum of 20-25 signatures that need to happen. And if there are 2 or 3 people signing, you can imagine the time it takes. And if we are buying 50 of a particular item, let's say if you're buying 50 trucks, we have to sign 50 separate such agreements, and 50 times and into 25 times is an amount of signatures one has to do from a practical perspective. Can we look at e-signature? Can we look at ultimately blockchain so that all these paperwork can be moved to a digital platform? The second is another suggestion that came from one of our attendees, and also something that we've seen, is that when items get repossessed by financiers, they typically are lying till the process is completed, whether it is a truck, whether it is any kind of equipment, and the time period for that particular item to be recycled is very long. In fact, sometimes to that extent, that particular item is completely finished before it can even get recycled. We've seen this in many places. You go to police stations and different parts of the country, you'll see a lot of equipment that are lying around that have been repossessed or by the push of the financiers. So this is another small area that can be thought about, which can help to ensure that assets are not wasted in our country. So compared to global levels, leasing is still in its infancy in India, and I'm pretty sure that more and more people are going to start moving towards it. We look forward to today's engaging discussion that can help to encourage a very vibrant leasing market and get all players in the industries to come together for looking at this alternative source of funding. Thank you so much.
Thank you, Mr. Agarwal. Now I would request Dr. Niranjan Hirandani, President, ASSOCHAM, and Founder and Managing Director, Hirandani Group of Companies, to kindly give the opening address. Dr. Hirandani, please.
Sir, you are on mute. Please unmute yourself.
As President ASSOCHAM, I am really honored, honestly, personally pleased to have with us General VK Singh, our Honorable Minister of State for Road Transport, being over here today. ASSOCHAM has been integrating with government, the Honorable Prime Minister, various departments of the Government of India, in order to see that the ease of doing business in India is definitely taken off in a very beautiful way. The second part of it has been that we have received cooperation from your department, from various departments of the Government of India on so many occasions, including during this period of lockdown, where so many rapid changes have been brought about in order to bring about what Vineet Agarwal has properly posed out, and appropriately so, because he runs the Transport Corporation of India and he understands this business very thoroughly. So thank you, Vineet Agarwal, for having posed up the issues which are relating to the leasing and hire purchase. This afternoon, we want to thank you first, Honorable Minister, for the wonderful work being done by your department. The entire Bharatmala Pariyojana of 66,100 kilometers of roads connecting to 550 districts, which will bring up the speed of travel in India by the commercial vehicles by 20 to 25%, and ultimately bring down the supply chain cost by 5 to 6%. This itself is a humongous change which is taking place in the country rapidly, along with, as Mr. Agarwal correctly put up, the issue of GST changes which have taken place, which we have removed so many barriers that the time for travel, which was stuck at Octroi Nakas all over the country, have completely been disappeared and written off. The second part of it, which is equally important, is that any country which goes through a recession definitely needs input in terms of roads, housing, and other infrastructure. It is very really pleasing to my heart and mind to know that more than $82 billion of investment into roads is proposed, and already 34,800 kilometers of highway are under construction out of these things, whether it is done by the department itself, NHI, and also the 60 projects which are done by the hybrid annuity model. This very thing and the raising of funds that you are doing in terms of the TOT, toll operator transfer model, is something which is really creditable. I wish to compliment your department, sir, for the wonderful initiatives that have been taken in making a paradigm happen unheard of in the annals of Indian history. I think this change in terms of roads and vehicular traffic is actually marvelous. Yesterday, we heard the announcement of the tunnel, which is reducing the distance in Jammu by more than 100 kilometers of bypass in such treacherous areas. And I think all these activities really needs to be complemented by industry, by the country, and salute you all, sir, in terms of the activity that you are doing. Today, when we talk about leasing and hire purchase, it is a model which we believe is going to be a model which will make a paradigm difference in terms of funding and financing. And as you are aware, sir, that becomes a very important segment in any sector of the economy today, because capital and credit is not easily available. Hence, the system that we are suggesting today, sir, and the issues which Mr. Agarwal has pointed out, and the rest of the discussions that we will have today, is serving to bring about a homogeneity in the activity which you are doing so stupendously well, and also to see the commercial interest of each truck owner, the transport operator, and the people of India, including business and industry, and even agriculture, to see that the goods of agriculture, which almost 30% get destroyed because of the time it takes to reach from the farm to the end user. All these activities are really going to be important, and hence the ASSOCHAM really takes up these flagship events. And sir, we are really honored and pleased and grateful to you for having blessed us by being here today with us. And we really thank the other participants, especially Mr. Amitabh Banerjee from Indian Railways Finance, DK Vyas from Shray, Devrup Dar from Primus Partners, Vinod Kothari, and also Vandana Agarwal ji for all participating and bringing about different aspects of these issues and problems that we are now presenting in order to take care of the future of this growth, ultimately to see that the objective of the Honorable Prime Minister to make a $5 trillion economy and to bring ultimately a double-digit growth of the economy, as has happened in every country which has gone into a recession. Roads, ports, infrastructure, and housing have always been at the anvil of bringing industry and the economy back to normal, as well as they are the largest employers of people in the country. So the second largest employer in India, besides agriculture, is actually infrastructure, roads, and construction. So with that, sir, thank you again for being with us today. And we really look forward to your inputs also this afternoon.
Thank you, Mr. President, ASSOCHAM, for your kind words. Now I would like to invite knowledge partner, Mr. Vinod Kothari, founder Vinod Kothari Consultants, to kindly share the broad overview of the knowledge report on the leasing enabling the comeback in post-COVID world. Thank you, Mr. Kothari. To you.
Very good afternoon, everyone, and Honorable Minister, learned panelists, ladies and gentlemen. If you are wondering what is common between an intensive railway project, an aeroplane, a two-wheeler, a construction equipment, a truck, a luxury car, or a costly fashion accessory, they're all available on lease today. Leasing and renting options have done a fundamental change to the way we look at assets. More and more assets for business as well as personal use are available on lease today. And technology has made it possible to connect those with spare assets to those who need those very assets. What Airbnb could do with homes is also being done on a massive scale with other assets today. I would only be repeating what Mr. Vineet Agarwal so very well mentioned if I were to say that leasing has increased in relevance today all the more during the current pandemic situation, where the only correct way to acquire capital assets is to convert capex into opex by looking at the rental option. In our knowledge report, we would have also cited important data of 1930s when the Great Depression hit the United States, and we have data from at least two leading manufacturers of that time, IBM and United Shoe Machinery Company, which indicates that those vendors who offered leasing option, their sales were not affected by the crisis. So this could be a well pointer to the fact that even during the current crisis situation, leasing as an option for OEMs could really work out well to sustain their sales. Honorable Minister, in the transport sector, and I would say Mr. Vineet Agrawal is young enough, and therefore I would not be recalling on his memory, which is pertaining to 20 to 30 years back. In the transport sector, 20, 30 years ago, nearly 70%, I repeat, nearly 70% of small fleet operators were funded by leasing and hire purchase. That percentage today has come down drastically, and I would say mainly due to lopsided taxation policies. The International Finance Corporation of Washington published a report a couple of years back, giving the reasons as to why leasing is so very important for MSMEs in the country. And it contained a list of policy recommendations. These are the recommendations which require urgently the attention of the government. I would also add another very important point with the presence of the Honorable Minister today. And everyone appreciates the efforts being made by the government to redefine small business on the basis of turnover and put in place a unique Udyog registration portal. Well appreciated. But the present definition seems to be excluding retail and wholesale traders from the definition, which possibly was not intended. There is no reason why retail trade, with its last mile access to massive consumer base, should not get the benefit of MSME funding. We at Vinod Kothari Consultants, we are privileged to be part of this great event that ASSOCHAM has envisaged a couple of years back. And congratulations to Santoshji for making this work. And we are very happy to present our knowledge report to this very august gathering. Thank you very much for your kind attention. Thank you.
Thank you, Mr. Kothari ji. Now I would like to invite our knowledge partner, Mr. Devrup Dhar, Managing Director, Primus Partners, to share his views on the report, COVID-19 Redefines Public Transportation. Mr. Dhar. You're on mute, Mr. Dhar.
Sorry. Thank you, Mr. Tambe, and a very good afternoon to Honorable Minister General Dr. V.K. Singh ji. A very good afternoon to all our distinguished speakers today, panelists, and the audience present. So public transport, as we all know, it forms the backbone of every large city, every large metropolitan area, and India is no different. However, as the pandemic unfolded, one thing which we saw that public transport was majorly impacted. With this context, with this background, ASSOCHAM and Primus Partners, we worked together to prepare this report, which is titled COVID-19 Redefines Public Transport. Basically, we looked at the challenges that the public transport segment, the industry, the operators are facing, and what can be the possible solutions to get this back on track. We worked on 3 tracks. We did a dipstick survey of citizens across 8 of the largest cities and metropolitan regions in India. We did our own analysis, our thoughts into it. We put in our thoughts into it. And we took the views and opinions of 8 leading experts in this field. We were fortunate to get the views of Secretary Mott. We took views from the public transport operators. We took views from Uber representing the app-based cab space. We took views of technology service providers, payment service providers, and we also looked at global firms, global operators, global think tanks to get a well-rounded view of this. And with all this background, we looked at, so the report talked about 5 or 6 key themes. First, we saw that the preference for public transport in cities, which was in large cities, which was about 55%, would be coming down to about 20-21% as per the survey which we did, which also means that this is a challenge both from an urban planning perspective in terms of congestions, also from how public transport is being viewed and what needs to be done. we looked at the aspect of working from home and we asked people on that front, and we took views of experts, and we saw that 74% of the people surveyed would want certain amount of work from home to continue, which means there has to be a lot more play of technology as we go forward. Hygiene and safety were the most important aspects from a people perspective, from a citizen perspective, to get public transport going. People felt that face masks should be mandatory when using public transport. There were three major concerns which citizens had. One was in terms of whether social distancing norms can be maintained in having to touch things as you use a public transport, in terms of whether the vehicles would be disinfected at a regular interval. And as we looked at the various organizations, we saw that all the public transport operators, or let's say organizations like Uber, is taking steps to address all of these. An important aspect which came up.
Mr. Dhar,
Yes,
Mr. Dhar,
sure.
sorry to interrupt, but I think Dr. VK Singh has to leave, so maybe we'll first take up with him and then we'll continue later with you.
Sure, sure.
Just as request has come that he has to leave, so I would. It's my pleasure and privilege to invite our chief guest, General Dr. VK Singh, Honorable Minister of State, Ministry of Road Transport and Highways, Government of India. Sir, we would kindly request you to enlighten us with your address. Dr. Singh.
Thank you very much. Mr. Niranjan Hiranandani, President ASSOCHAM, Vineet Agarwal, Senior Vice President, and all the eminent people from ASSOCHAM and the industry who are present here. A very good evening to all of you. And let me congratulate ASSOCHAM for organizing this webinar, which is probably a very important need of today. Given the state of economy, given the way ahead, given that COVID is not going back in a hurry, it is going to remain for some time. So I think there is a need. And why I say it is going to stay for some time, antibodies will develop when all of us get infected, whether we get infected by vaccine or we get infected otherwise. So it is going to stay, and we need to watch out the way we are and devise methodologies which will ensure that we can carry out our work without any disruption. The other day, I was with Vicky, and it was very heartening to note when the L&T said that their workforce that was working in infrastructure sector pre-COVID times is almost back. Shows that things are moving surely on a very sure footing. And I would say that whether it is road infrastructure or any other infrastructure, these are the mainstays of economy in terms of how they generate funds, how they ensure that the money keeps moving, and ensure large number of people who get employed, which brings liquidity into the market and spurs the demand. So this is a very important sector that we need to look at. You are all aware that India has the second largest road network, approximately 5.89 million kilometers, and almost 65% of our freight traffic goes on roads, and almost 90% of our passenger traffic goes on roads. If we were to innovate, if we were to make things better on our roads, where the distances are shortened, where we can ensure that haulage becomes cheaper because distances are shorter, time taken is less, and the mode of transportation is such that it consumes lesser in terms of the money spent on fuel, you will find this freight haulage on roads will grow, because it is the shortest in terms of time. Today, if somebody has to send, let's say, a container for export from Ludhiana, best for him is to put it in a container and put it on a road transport and send it directly to the port. Otherwise, it goes to the dry port, and from dry port, it gets loaded onto the train. Train takes its own time to reach a particular place. It gets unloaded, gets shifted. A lot of hassles in that. So what we need to also look at is what in the future are we all going to do to make road transportation cheaper, road transportation better, and as we keep building roads which are better and better, how do we make roads which will consume lesser cost than what it does today? That's a task that we have undertaken in our ministry, to find out technology, to find out measures which can bring down the cost of road and yet improve the quality of road. And that is what is going to matter in our strive to ensure that in next 5 years, we have something like 220 million kilometers of road, linking everything and giving you the shortest distance possible. I can explain to you. Recently, we approved a project. Of course, Delhi, Vadodara, Mumbai has been in the news for a very long time. We hope to complete it before 24. We have one on the anvil, which the work is starting on it. It is Delhi Amritsar direct, and we hope that we'll be able to allow you to reach from Delhi to Amritsar in 3.5 to 4 hours. Similarly, we are looking at Dehradun, so that Uttarakhand opens up to rest of the things. New greenfield alignment, which will from Delhi to Dehradun, it should not take you more than 2.5 to 3 hours. So similarly, economic corridors, passenger corridors, all kinds of corridors, along with Bharatmala project, the aim is the linkages become better. And it was brought out where the US economy and the times of depression are concerned, it is the road building infrastructure and rest of the infrastructure which went with it is the one which spurred the growth. Because road means not only material, it also means machinery. And these days, if you are looking at technology, the dependence on machinery is becoming that much more. Unfortunately, most of these machines we are importing today. I think somebody has to look at it from the point of view, if I'm importing today, can I make it in India tomorrow? Because the demand is going to grow. And if the demand is going to grow, more it is in India, the better it is. And this itself will require manpower, machines, all kinds of things. So when I look at what our Prime Minister has said of 5 trillion economy, it's a target which is well achievable. I always believe that more optimistic you are, the results will be that much nearer. Now, our highway construction speeds have also increased. What we have made an increase from, let's say, 16 between 16 and 19 to almost achieving 21% growth. Now, this is something which is going to further increase as we delve into technology and better material. To give you an example, we thought that we'll be able to induce the cement industry to latch on to us because we were making concrete roads. Unfortunately, that didn't happen. They made their own cattle, and they were not looking at long-term gains, they were looking at short-term gains. If they look at long-term gains and they put a fixed amount of their thing for road building, and you can make roads with steel meshes and not the type of thick rods that we use today, you can actually reduce the size of the concrete block that goes to make the road. Saves money, can be done faster. And then you lay a thin layer of bitumen on it, your driving quality increases. So there are many things that are in the offing and many things that will make a difference in the way we look at things. You are aware of the transport policy that we have made. Many new things have come into it. We are looking at an accident fund so that we can give cashless treatment in that golden hour where we can save lives. We don't want to lose lives because most of our accident victims, at least 70 to 80%, are in that block which is young, and most of the cases are overspeeding. So we are ensuring that we remove accident spots. We have tied up with World Bank. We are doing our own financing so that there are lesser accidents. We are looking at how we can ensure treatment is faster. We are looking at what we can do to ensure that there are better wayside amenities so that people are rested, people are able to ensure that they are not tired. And we are also looking at how we can save fuel. Today, your import bill is almost 7 crores annually. Can we reduce it? Yes, we can reduce it. Whether it is CNG, whether it is LPG, whether it is you using anything else, or you go in for electric traction. Not very difficult. It's a question of what we want to do so that we are able to rely on our own resources. We need to look at beyond the lithium batteries, because most of the lithium, unfortunately, has been is tied to China. They've been able to think ahead, and most of the mines are in their control. Let's look beyond, and world is looking at it. So if you have electric traction, look at the advantages. The cost is lesser. Suppose you had a system on which, just like the tram or just like other systems that some of the countries have come up with, where the haulage vehicle draws its power from the road with something which is laid on it, it will carry on. Cost is very less. And once the cost of the haulage is less, obviously the commodity prices also come down. Commodity prices coming down means your exportability and your worthiness in that increases. Plus, your own people get that much of benefit. Now, we are in the ministry looking at all these things, and we are also very happy that the way the FASTag and others have come in terms of digitization is going to give us great benefit. We are looking at something like 1 lakh crores annually from our tolls in the next 5 years. Now that is the money which goes into building roads again. So this particular sector is one in which I see no loss. I won't repeat the words of my minister Gadkariji, who unfortunately is not with us because of COVID. Otherwise, he calls the road sector as Shylock, that they will build things and they will keep taking money from it. We are looking at monetization at every particular thing so that we are able to generate enough funds which go into making roads. Now, the subject that you have chosen today is one of the most interesting ones: leasing and hire purchase. At the moment, I think the general mindset is leasing is meant only for land, hire purchase is meant for some vehicles or something else, and that's it. But I think we need to go beyond that. And to that extent, this webinar that you are holding, you need to then propagate these things so that people understand it. Because let's take heavy machinery. If you have leased it, your capital cost is that much lesser. And somebody who's brought it initially, he recovers that amount from you and from others as he keeps leasing. It's a nice cycle that gets created, and everybody benefits. So there are many things in which assets can be utilized by leasing or hire purchase, so that initial burden is lessened. And as the times are, like I said, COVID is not going away. I think we need to look at it very, very seriously. And maybe you all can put a roadmap for people which can tell them what exactly needs to be done. Let that initiative come from ASSOCHAM, because just discussing has got no meaning. I think you need to be in that slot where you're able to lead people. One of the examples that comes to my mind is what Gadkari ji has been talking of, is the London bus model, where the buses are on lease. The people who are bringing those buses are taking the profit share, and there is a certain amount of profit that they're sharing with whosoever is running those buses. Driver is theirs, conductor is yours, and the system is working pretty fine. So that today, that hesitation, oh, if I get a electric bus, it will cost so much. You can reduce that. And there are companies in the world which are willing to do it. It is an opportunity. Today, when the economy is sluggish all over, maybe this model can spur the growth there also and benefit us also out there. Do look at it seriously. A point came up on public transportation. I think Devrup brought that on public transportation. My personal opinion is, if you make public transportation attractive, more and more people will use it. And I'll just take a small example. You take the bus system in Mumbai. Large number of people use it. You stand at one place, you know, in next 5 or 7 minutes, the next bus will come. People are well disciplined. They get into the bus, only that number, off it goes. Everybody uses it. There is no requirement to use any other vehicle. Or they go and use the local trains. They know they'll get down at this station, walk for 5 minutes to so-and-so place, catch a bus in next 5 minutes and reach their own office. Much more convenient. You don't have to go through the hassles of driving, meeting with accident, getting into a traffic jam or anything like that. So public transportation can be made very, very attractive. We have been talking of, in fact, I've been asking people, because there was a talk 2 years back on Skybus system. Get it to India. You will find many takers. I mean, that is a system which costs 1/10 of what the metro costs, with almost similar facilities. Metro is almost 300 crores per kilometer today. The Skybus system is 30 crores per kilometer. You have this, you have good electric buses on London bus model plying, air-conditioned bus, good environment, cheaper in terms of fare that you will charge. Everybody will travel. It's what you provide. If the thing is not attractive, obviously you will say, okay, I'll do a carpool. After some time you say, oh, this carpool is not working because the people with whom I'm pooling, they are taking more time to take me around in circles, so I'll go in my own car, and number of vehicles increase on the road. There is a great amount that can be done. And I think we are at that stage because of this pandemic that more and more opportunities are available. And I think you as captains of the industry need to catch it, utilize it, profit by it, and make people's life much more better. I think that that should be the aim of getting things done. And I'll be very happy to see what you take out in terms of your report, and do include a roadmap, how people can go about. Because people don't understand lease and hire purchase except for few commodities. And I think once you lay it out for them, it will become that much simpler. With this, let me thank each one of you, and let me thank you for inviting me over. You have got the best wishes from Nitin Gadkari ji also for this webinar that you all have organized, and I wish you great success on the mission that you have embarked on. Thank you very much. Jai Hind.
Thank you.
Honorable General, just please do communicate to Mr. Gadkari ji our best wishes and wish him well, that he becomes good, well enough, and tell him that he has to come again for another program in substitution of his absence today. So we will definitely call him for another program to do, and we will be very happy and grateful to you for this interaction which you have given. And we will definitely come to you with our report and suggestions that we have in order to make it very successful as you have suggested and in the lines in which you have suggested. So we look forward to that.
Thank you, Dr. Ranjan. Thank you very much.
Thank you.
Thank you very much, Dr. Singh. I know there is a pressure of time, but we would just request you if you could just hold on for a couple of minutes. We have two more eminent speakers in for this session, if possible. We now request Mr. D.K. Vyas, Managing Director, Shri and Equipment Finance, to kindly share his thoughts on leasing industry.
Good afternoon, Honorable Minister and eminent panelists. I think it was music to hear that, okay, 1 lakh rupees per year toll collection, which Honorable Minister said for next 5 years is going to be invested in the road, which means, sir, that 20% of that include the component of equipment, which means we expect a new demand for the new equipment which will be used to construct this road to the extent of 1 lakh crore. And this kind of capex can only be made by way of providing equipment on leasing. I think today leasing is the best way to create the asset. And as you rightly said, the heavy machinery for road equipment. So just to say with you, because we are into the leasing of construction equipment mainly, most of the equipment today already started manufacturing in India, and a few of the equipments are still getting imported. But I'm sure that also slowly with the Make in India and Atmanirbhar Bharat, which is being happening, that will also be started getting manufactured in India. So leasing is a very important tool to create asset in our country. I think leasing asset creation through leasing hardly some few percentage, 4 to 5% compared to 20% plus minimum asset creation across the world. So as you rightly said, this is the way to create equipment and the key to create infrastructure, whether it's a railway, road, etc. Leasing becomes a key important tool to create the railway wagon, the road equipment, etc. Sir, just 2-3 issues which I thought I'll bring to your notice. One is, sir, the GST. Of course, leasing earlier, as Mr. Kothari said, up to 70 to 80% of equipment financing was happening by way of leasing and hire purchase. But after that, due to the multiplicity of taxes in the form of VAT and service tax, this product got killed. And now with the simplicity of GST, it got revived. And as per the White and Clark report, last year there was a growth of 60% in leasing volume in our country, which is a good sign. But sir, still today the leasing is not growing because GST applicability on the lease also is generally equivalent to the same of what being levied on the equipment. So that actually makes the leasing a bit of non-viable for the customer. So one of the suggestion is that if the GST on leasing can be de-linked from the leasing, the GST rate of the equipment which is being leased, that will help to make the leasing instrument more attractive for the customers to really acquire the asset through leasing. That is one suggestion, sir. Second is that getting as a lessor to get the funding from the financial institution for leasing product still is not a very common factor, because it's easier to get a funding for a equipment or a vehicle if you want to buy it on loan, but if you want to get it on lease, it's very difficult to get the funding or the refinancing. Suppose the NBFCs start doing leasing for the equipment, so it becomes difficult to securitize those lease rentals, because there has been a securitization and assignment law, but it's easier to do it for non-movable asset, non-movable like land, property, etc. But for the movable equipment, getting the lease rental discounted or securitization is still a kind of challenge. I think the concept is still not been well understood in this financial ecosystem, where the NBFC or the lessor feels challenge of raising resources for providing the equipment or leasing. And third key importance is the risk management. So in our country, still we do not have the organized marketplace for the used equipment, because leasing is the business where the asset risk is taken by the lessor, and that risk can be mitigated if we are able to create an ecosystem where the used equipment market is developed in an organized manner, where you can trade with these used equipment and reduce your residual risk of the equipment, And there also GST, etc., makes it a little non-viable. And the entire ecosystem creation by way of making availability the financing for used equipment, for the used equipment or the secondary lease, because the primary lease itself is get bit challenging in terms of understanding today in the normal MSME segment. The secondary lease refinancing again becomes another challenge. So the risk mitigation by way of making this organized marketplace with the help of GST, where the OEMs also will be playing an important role in terms of partnering with the lessor and the financier to see how do you mitigate the risk of the secondary leases, where the asset risk can be reduced drastically. I think these are two, three key important issues which will definitely help to grow the leasing, which in turn will grow the asset creation in our country, and particularly in the road segment, because we are from that area, and I from a company where 33% of the road equipments are being leased by us. So I think these are real practical issues which we handle, and the road construction gives a lot of opportunity. And the equipment market, the road construction equipment, due to as you rightly said, the growth in road construction by 20 to 30% increase in the road construction per day is also increasing the demand for the road equipment. Sir, with your support and your ministry's support, the road construction equipment has already come out of the COVID issues, because the growth in road equipment in the last 2 months is much higher than what we had in the last year. So whatever degrowth we had experienced in the first year to the extent of 60%, today we can say you, sir, that the road construction equipment are growing at the rate of 20 to 25% compared to the corresponding period of last year. And it's primarily because of your ministry's contribution in terms of road sector. So thank you very much for that. I think these 2-3 issues we are able to address, for which I'm sure through ASSOCHAM will make a recommendation which will help us to grow the leasing activity in our country. Thank you.
Thank you, Mr. DK Vyas. Dear friends, we have eminent guest Mr. Amitabh Banerjee, Chairman and Managing Director of Indian Railway Finance Corporation. I would warmly request Mr. Banerjee to kindly deliver his special address on the topic. Mr. Banerjee.
Honorable Minister, Minister of Road Transport, Ministry of Road Transport and Highways, and my dear esteemed colleagues, a very good afternoon to you all. While leasing had several phases of rapid development and gradual rapid decline, the state of the leasing industry is a product of the regulatory and tax environment. Leasing in India originated in 1973. It grew in popularity as a financial product quickly, and by 1986, as per RBI's records, there were 339 equipment leasing companies with leased assets aggregating to USD 36.85 million. Leasing now looks set to undergo a revival in India. This is not because of newer and more transparent regulatory regime or because of any tax arbitrage, but simply because of the fact that the Indian economy finds itself in new age businesses and startups believe in lighter balance sheets, focusing on their core operations rather than asset build-up. Leasing may play a significant role, particularly in light of the looming NPA crisis. Lessors retain ownership of the asset, hence repossession of the asset is easier. Secondly, in case the lessee defaults and has to undergo corporate debt restructuring, operating lease rentals are classified as operating expenses and hence receive priority in any payout settlement. Notably, the Insolvency and Bankruptcy Code, the IBC, recognizes leased assets as excluded from the bankruptcy estate for the liquidation purposes, thereby granting the lessor the primary right to stay out of liquidation proceedings. Amendments to the SARFAESI Act permit lessors under a financial lease to make use of the SARFAESI process for recovery. It is felt that this does not rule out common law procedures. Additionally, certain sectors have emerged as new thrust areas for leasing. This includes the solar sector. A solar lease has several attractions: high depreciation rates allowed on solar equipment and the ability to tie the payments by the user to the savings in energy cost. I have just a couple of recommendations in this particular in regard to leasing. Inclusion of financial leases in financial services under GST, an exemption from GST for the interest component of financial leases. And second is the reduction of rate of GST on lease rentals. Now coming to my organization, that is Indian Railway Finance Corporation, I'd just like to have share a glimpse of a brief profile of IRFC. The genesis of IRFC's creation is traced to insufficient budgetary support during the late 80s from Ministry of Finance, that is Government of India, due to GOI embarking on the path of fiscal consolidation and limited internal generations of Indian Railways due to a sizable subsidization of passenger fares and ever-increasing salary or pension liability met out of Indian Railways' own revenue. Therefore, IRFC was created and formed to augment the planned funding requirement of Indian Railways. The company was created in the year 1986 as a wholly owned Government of India entity for meeting the extra budgetary resource requirement of Indian Railways. The company borrows from diversified sources, both from the domestic and overseas financial markets, to meet railways for funding requirements, consistently funding more than a quarter of Indian Railways capex requirement. The company has become strategically important to Indian Railways. Cumulative funding to rail sector to end of FY20 is of the order of rupees 3.39 lakh crore. That is the amount that we have financed since inception to end of FY20, including funding of rolling stock assets of about 2.3 lakh crore and railway projects to the tune of 1.03 lakh crore, and funding of certain railway entities, so some of the SPVs of Under Minister of Railways like RVNL and Aircon, to the tune of 7,000 crore. IRFC started initially with funding of rolling stock assets, and with effect from 15-16, that is FY16, we made a foray into funding railway projects also. On a cumulative basis, IRFC's share in the total capex of Indian Railways, which remained at about 25 to 30% for about 25 to 25 years, has now gone up to more than 44% during the last financial year. The dependence of Indian Railways on IRFC's funding has gone up in the recent years since 15-16, as evident from the fact that it has gone up from around 19% of the total capex in 2014-15 to more than 44% in 19-20. The company has a unique and symbiotic relationship with Indian Railways, which happens to be its single owner and almost the sole client of IRFC. IRFC is an NBFC NDSI, that is non-deposit taking, systemically important NBFC, which is registered with RBI and has been categorized as Infrastructure Finance Company, IFC, and it is also a notified public financial institution under the Companies Act 2013. It is a sole financial institution in the rail sector. Now, what is the genesis of IRFC? Basically, as per allocation of business rules of Government of India, no ministry other than Ministry of Finance is empowered to directly raise money from the market. That is why IRFC was formed, to raise the money on behalf of Ministry of Railways for financing its capex requirement. By virtue of the same restriction, even IRFC also cannot directly lend to MOR. So what we do is, as such, we procure the assets of Indian Railways with our own resources and lease the same to Indian Railways on financial leasing terms. But for lease financing, Indian Railway Finance Corporation would not have come into being, and the resultant massive augmentation of infrastructural requirement of the railway sector would not have come to fruition. Funding of the capex of Indian Railways is an off-balance sheet item of Government of India and therefore does not impact its fiscal deficit. Now, IRFC adopts the financial leasing model for funding both the rolling stock assets, that is the trains, the train sets, and railway projects. In a financing leasing model, the ownership of the assets remains with the IRFC, that is the lessor, and the right to use is given to Indian Railways as a lessee. The lease covers the entire economic life of the assets, mostly 30 years, comprising primary lease period of 15 years and secondary lease period of 15 years. The entire lease rentals are practically recovered in the initial primary lease period of 15 years, and a very nominal sum of around rupees 1 lakh per annum is given by the Indian Railways to IRFC in the secondary lease period. The ownership of the assets rests with IRFC and is transferred to Indian Railways at the end of the lease period of 30 years. In the beginning of the year, the borrowing target of IRFC, which forms part of the union budget, is communicated to IRFC. The company in turn mobilizes funds from diversified sources, both from the domestic and international financial markets. The company adopts marginal costing model for pricing its leases, and therefore the lease rentals include repayment of the principal, cost of borrowing, and a moderate spread of around 40 to 50 bips. IRFC credit risk is almost nil, as the lease rental payments to IRFC forms part of the union budget and is voted expenditure of the Parliament of India. All the financial risks such as interest rate risk and exchange rate risk, variation risk are all passed on to Minister of Railways. Minister of Railways also provides implicit guarantee in the form of an undertaking contained in the standard lease agreement that is executed between IRFC and Ministry, which provides that in the event of IRFC having any liquidity problem while redeeming its debentures, its bonds, or redeeming its rupee term loans to commercial banks, Minister of Railways will make advance lease rental payments just in case any such eventuality arises, although no such eventuality has arisen since 1986 to date. This helps in mitigating the liquidity risk on account of the extraordinary support received from the sovereign. The lending profile is like this. The asset under management of IRFC is of the order of about 2,60,000 crore as on 31st of March 2020, which includes lease receivables outstanding against the leasing of rolling stock assets, advance funding for railway infrastructure assets, and loans disbursed to various SPVs of Ministry of Railways. As far as the borrowing profile is concerned, IRFC's risk-free business model coupled with its surrogate sovereign status help it in obtaining the highest possible credit rating from the prominent domestic credit rating agencies like CRISIL, ICRA, and CARE. And rating, the IRFC is rated at par with that of the sovereign from the international credit rating agencies like Moody's, S&P, Fitch, and Japanese credit rating agency. Sources of funds include both owned funds and borrowed funds. Net worth of the company as on 31st March is of the order of 31,000 crore. Total borrowing outstanding as on 31st of March, as I said, is about 2,35,000 crore, including a sum of 82,000 crore raised through taxable bonds, 34,000 crore that we have raised through tax-free bonds, and 54 EC capital gain bonds. Rupees 20,500 crore that we have raised through institutional finance from only LIC. More than 67,000 crore through long-term rupee loans, and about 25,500 crore through external commercial borrowings, including issuance of overseas bonds as well as syndicated loans from the multilateral funding agencies. The papers issued by the company both in domestic and international financial markets are being treated as the benchmark papers by the other issuers. The company constantly strives to diversify its borrowing portfolio in terms of markets, instruments, and investors to minimize its cost of borrowings and in turn the cost to MOR, that is the Ministry of Railways. IRFC enjoys cost advantage which ranges from 25 to 30 bips vis-a-vis its peers like PFC and REC or NHAI in the domestic capital market. Well, we have been given certain accounting exemptions. The company has been exempted from the provision of deferred tax liability pursuant to the exemption granted by Minister of Corporate Affairs as a government company which is engaged in the business of infra finance leasing, with not less than 75% of its total revenue being generated from the business with government companies or other entities owned or controlled by government, are exempt from the provisions of DT, either deferred tax asset or liability, under Ind AS 22 and Ind AS 12 respectively. The company's revenue from operations is of the order of about 14,000 crore in 1920, up by 25% as compared to last year. The CAGR of the revenue from operations during the last 5 years is of the order of 14%. The asset under management has gone up from 1,95,000 crore in 1819 to 2,60,000 crore, with a year-to-year growth of 31% last year, and CAGR of the AUM during the last 5 years is 25%. The outstanding borrowings has gone up from 1,73,000 crore in 1819 to 2,35,000 crore in 1920, up by 35%, with a CAGR of 27% in the last 5 years. The net worth of the company is 31,000 crore as against 25,000 crore, up by 24%, and the CAGR is 29% in the last 5 years. You'll be surprised to know that the capital adequacy ratio of IRFCs is an astounding 404%, as against the prescribed limit of 15% for infrastructure finance company, primarily because of the fact that more than 96% of our assets is practically risk-free. Now, the way ahead is that Minister of Railways has set a target of investment in capex, that is the capex target of Minister of Railways is of the order of about 25 lakh crore till 2025, and IRFC is expected to fund to the extent of around 6 to 7 lakh crore during the same period. And I'd just like to end by saying that very shortly we are coming up with with an IPO of IRFC. This was supposed to be held in the mid-March, but because of COVID, this got delayed. And somewhere by the end of this financial year, we shall be going public with a 5% of the share capital on OFS basis, that is offer for sale by Government of India, and we should be coming out with a fresh issuance of shares to the extent of 10% of our issued capital. Thank you so much for being patient here. Thank you.
Thank you very much. Thank you, Mr. Banerjee. It was really a pleasure and privilege to hear you and the contribution of IRFC to the overall growth of railways and the country. Thank you.
Thank you.
Dear signatories, it's very interesting to understand how leasing has really contributed or would contribute going forward in India. If you look at the past trends that have happened in the global markets over the last 50-100 years, leasing has been a paramount financial product for the entire set of industries to grow. Right from the developed nations which had leasing to back their industrialization, to the developing economies like Africa and Eastern Europe, where leasing has picked up phenomenally well to build capacities. I believe it's a product which makes a change, which makes an impact in the economy at a very far superior and a larger stage. It's time that all the industry veterans, players and participants in India come together and work and grow this industry, so which will help India realize its dreams in capacity building. As we have heard all the eminent speakers, with the advent of GST and other favorable regulations and laws which have come into place, I think we are at an inflection point in this country where if we all work towards placing leasing as one of the topmost products of financing in this country, it can actually have a multiple impact across all segments, right from transport to industries to healthcare, to IT, to auto, and so on and so forth. It is time that, as you would see, that over the period of time, the so-called Uberization of the Airbnb kind of a thought process, which has been percolating down to an individual level, where the economic value of an asset is playing a more prominent role rather than the ownership of the asset. And that is where this mindset change of an individual on the ground is going to drive both the B2C businesses in the leasing segment as well as the B2B businesses in the leasing segment. Because people over a period of time are more and more now looking at what is the economic benefit, economic value am I going to look at from the equipment, and is there somebody else who can take care of it, maintaining it, upgrade it, and I would only use it for a specific purpose. And that percolation of thought process down the line will definitely help India grow in leasing, especially in the COVID scenario and the post-COVID scenario, where cash flows are going to be tight. Operating cash flow cycle needs to start. As rightly said, we would require leasing to kickstart many of the segments so that the equipment can be taken on lease and an operating cash flow cycle can be started, and a lease rental would be paid out of the operating cycle. Right? Leasing has been one of the fundamental products that really got US going post the 1930s depression, because a lot of industries and segments were funded through leasing, especially in segments like transportation, logistics, machinery, etc., healthcare. I believe this COVID has also put a focus on healthcare infrastructure in this country, and how do we going forward augment healthcare infrastructure. Finally, I would like to make a mention that it will go a long way to fulfill our dream of becoming Atmanirbhar, because and achieving a $5 trillion economy in times to come. Mr. Santosh Parasar has created this platform at ASSOCHAM, wherein second time in 2 years, industry stakeholders have come back and enlightened all of us. I would thus request ASSOCHAM Presidium that a dedicated task force on this subject is the need of the hour, to educate people, promote leasing and hire purchase, and put forward policy matters to various regulators and ministries, from time to time. On behalf of ASSOCHAM and on behalf of Auriga Lease Finance, I have a great pleasure in proposing a very hearty vote of thanks to our Chief Guest, General Dr. V.K. Singh, Honorable Minister of State, Ministry of Road Transport and Highways, Government of India, for very kindly accepting our request, taking his time out from very busy schedule from Parliament session and sharing his visionary leadership thoughts about how important it is, as a product in transportation and going forward. We are extremely grateful to you, Honorable Minister, sir, for being with us this afternoon and for sharing your thoughts and releasing the knowledge report. We are also thankful to Mr. Amitabh Banerjee, CMD, Indian Railways Finance Corporation, for your special address. I'm also thankful to Dr. Niranjan Hiranani, President, ASSOCHAM and Founder, Managing Director, Hiranani Group of Companies, Mr. Vinit Agarwal, Senior Vice President, ASSOCHAM and Managing Director, Transport Corporation of India Limited, Mr. D.K. Vyas, Managing Director, Shrey Equipment Finance Limited. I'm also thankful to Srimati Vandana Agarwal, Senior Economic Advisor, Ministry of Civil Aviation, for joining us for this special address and chairing the forthcoming technical session. I'm also thankful to knowledge partners, Mr. Vinod Kothari, Founder, Vinod Kothari Consultants Private Limited, Mr. Devrup Dar, Managing Director, Primus Partners, for coming with their knowledge reports on the subject, Mr. Deepak Sood, Secretary General, ASSOCHAM, and Mr. Santosh Parashar, for Additional Director, ASSOCHAM, and his team for conceptualizing the theme and organizing this summit. I also thank distinguished participants, friends from the media, and thanks to everyone for this wonderful session. And let's hope that this session would help a lot of industry players to take leasing to the next level in this country. Thank you.
Now, good afternoon, everyone. Now it's time for our technical session. Let me introduce the session chairperson as well as speakers for this session. I hope that you will be enjoying on technical aspects of this particular subject. So let me just introduce to the chairperson and the session expert eminent speakers here. We have with us session chairperson Ms. Vandana Agarwal. She is Senior Economic Advisor, Ministry of Civil Aviation, Government of India. She will be enlightening us on the subject of her domain, particularly this sector of leasing in civil aviation as well. We have with us Mr. Srirang Tambe, Founder and CEO, Auriga Lease Finance. We have with us Mr. Vinod Kothari, Founder, Vinod Kothari Consultants Private Limited. He has been instrumental for since beginning of this particular program and the last program as well. He assisted us a lot on technical grounds. For this particular technical session, he will be addressing on the risk management framework, including legal recourses for default NPAs and regulatory conditions and industries expectations from regulators' perspectives. And we have with us Ms. CA Bandana, Sarika Gosai, Partner, Assurance, Mazars in India. She will be enlightening us on changes to accounting standards and tax reforms and its impact on leasing and hire purchase, as well as how auditors will view the businesses going forward. We have with us very, very eminent speaker on this subject, Mr. Raman Agrawal. He is the co-chairman of Finance Industry Development Council. He will be talking to us on the progress in India versus global leasing trends, as well as on the topic of view of lenders and financiers and credit rating agencies towards leasing and hire purchase in India. We have with us Mr. Sandeep Gambhir. He is the MD and CEO of Oryx Auto Infrastructure Finance. He will be talking to us on global market trends and market opportunities that lie ahead, especially in post-pandemic scenario, as well as on the topic of risk management, keeping in mind the equipment sale and residual value analysis. We have very eminent speaker, Mr. Amit Dang, President and Head of the Business Shrey. He will be talking to us on strategies to grow leasing and hire purchase business going forward, and newer business segments that hold potential, especially in post-COVID pandemic scenario. And the speaker we have Mr. Harivansh Komawat. He is the Chief Finance Officer of Auto Capital. He will be talking to us on how technology will drive leasing penetration in India. Now, I would like to request and invite Mr. Srirang Tambe to please take this session up and invite Madam Vandana Agarwal ji to enlighten us with her this session chairperson address, please.
Thank you, Mr. Ravasa. I thank you very much for all joining this technical session. I would really cordially invite Srimati Vandana Agarwal, for this session, and I would like her to address the audience.
Good afternoon, friends. I'm very happy to join in this session. Of course, after hearing the roads, the big money involved in roads, and the huge amount of governmental or sovereign backing that the railway sector gets, civil aviation seems dismally small. But let me see if I can interest everybody with our sector, which has a very unique leasing and financing ethos. We also don't have a little bit of the baggage that the road sector, or at least the smaller assets market, has in India, because aircraft, which is the big asset in civil aviation, it has traditionally always been leased out from overseas. For very long, we just had national carrier, and invariably, just as railways was being financed, it would be financed, the assets would be financed through government budgetary resources. Thereafter, we had a new policy where low-cost carriers came in. And once the low-cost carriers came in, we began to see a serious interest in leasing and financing of the asset aircraft. So it also happened much more in what we call the narrow bodies, which in terms of the price of the asset itself are maybe 33% in the capex terms, in case it was to be procured, or less. The big wide bodies are indeed involving very heavy capex. Aircraft leasing globally is heavily regulated, and many of the problems of repossession have been sorted out through the Cape Town Convention, of which India is a signatory. There are problems with that. It's not as though many of you would have many memories, I think, if not actual participation in the Kingfisher, in the SpiceJet bankruptcies that we saw, the Manias, the East West Airways, and many of these aircraft you would still see lying in the airports, simply because either litigation prevented the repossession of those aircraft by the lessors, or there were other constraints, not least of which is that we did not have the IBC, we didn't have many other regulatory features that were required, and most importantly, we didn't have the Cape Town Convention Act incorporated into our system. Presently, just to digress on that, we have the draft on the website, a revised draft, and we are likely to come through with the draft notification, with the cabinet approval, and subsequently the parliament approval, etc., on it in the months to come. We have, in the meantime, solved many of the problems which arose from India's declarations when we signed on to the Cape Town Convention, what they mean for different laws in India and regulations. And so we are much more in readiness to go for the Cape Town Convention Act, Domestic Cape Town Convention Act. Globally, about 50% of the aircraft are leased. In India, it would hardly surprise anybody to know that 85 to 90% of the aircraft are now leased or financed from abroad. And a very interesting model of sale and leaseback is adopted, mainly because it helps to lower the pricing of the aircraft. The airline typically buys a much larger set of aircraft from the OEM and immediately sells them to multiple lessors and leases back the aircraft in small numbers, 1s, 2s, 5s, 10s, and so on. In the process, it makes a sizable upfront cash payment, cash profit, and also, as has been spoken about, it begins to work on the operationalization of the cash flows with from the revenues with the lease rentals and the maintenance, which is also a very hefty sum. Incidentally, for any normal sized narrow body aircraft or LCC carrier, leasing would be about 15% of its operational costs. The maintenance, which is also normally embedded in the lease agreement itself and is also very tightly regulated, is about 12 to 15%, depending upon obviously the age of the aircraft or the asset that you have leased out. So it's a pretty hefty sum that is there in the balance sheet, even on the operating side of an airline. And what we have found is that under COVID, for instance, passengers traffic has been most impacted. The aviation sector has actually taken the brunt of COVID, even as compared to the other modes of transportation, simply because the international traveler stopped immediately. And we put a complete lockdown from mid-March on domestic passenger travel as well. And passenger revenues were typically over 90% of the earnings of an airline, a scheduled carrier. I'm talking about scheduled carriers, not talking about general aviation, which has very different models for financing, or the non-scheduled operations, again, or helicopters. I'm talking about fixed wing when I'm talking numbers, but should anybody need to have some idea about this segment, which is also now a very versatile segment, I can do so. So we found that there wasn't enough cover even to meet lease rent earnings now, even to meet the lease rentals of the aircraft. And I must say that we have been in touch on a very regular basis. I've been holding meetings with all the lessors of our airlines, although these are not all governmental deals, but we've been meeting up with them on web and everything. And we've been working with them to try and assuage their fears. And so I'm happy actually to report that despite the well-known financial problems of many of our airlines, some of our airlines, let me correct that, we have not seen the kind of bankruptcies announced worldwide. There have been any number of Chapter 11 announcements in the UK, in Australia, in the US, and many other places as well. So we have also not had the kind of retrenchments that is seen. That's partly because government has again been very proactively working with the Indian industry, Indian aviation sector, to try to see how we can make sure that they stay afloat. And the staying afloat was not possible through government largesse, not even tax write-offs, because all of the government money went in three areas, whatever they had. One, of course, is the farmers. And as had been said by the Honorable Minister, farming is the biggest employer. And so obviously, and with the Rabi season coming on, with all the harvesting, etc., they needed to be paid. So we had them taking bulk of the money. Then we had the very small MSME sector taking a huge amount of whatever government had in its kitty for ability to finance. And thirdly, it went to meet the social needs of not just the migrant workers, but also those who are impacted by health, by COVID itself. So there's a huge amount of payments which have been going out, or at least there's a budgetary charge. There's a charge on the budgets for these sectors. So civil aviation did not come in the forefront where money is to be given. So therefore, when I hear things like one of the suggestions which came on the GST, I was tempted to say that yes, it resonates with me. But what also resonates with me, well, is the fact that many of the lease rentals are all paid out by the Indian Airlines under reverse charge mechanism, which has to be paid under cash. And so do the MRO related payments, the maintenance reserve payments, which go out. They are also under RCM and on cash. Whereas because there isn't enough activity of the aviation sector, their input tax credit is accumulating. And so they are having to cough up on the RCM payments when they know that they are going to lose on the ITC accumulation. So if the ASSOCHAM can help us reach out to Ministry of Finance on this matter, we would be most grateful to you. I mean, to not be facetious, but to say that I can understand that there would be many types of RCM payments, and part of it arises because the tax structure is such that the ITC is actually accumulating. But when the accumulation reaches above a certain threshold, and we can have an assessment of where this measure would really have maximum benefit, and for reasons of public interest rather than just private corporate interest. I'm just trying to see how we can help out aviation on this, because most of you are not flying. Most of you are just sitting at home holding webinars, etc., etc. And we are not earning money. So we need you to get out of your offices and begin to take business trips and so on. So no, but again, to come back to it, it's important to see if there is a value or a threshold that can be put where such ITC accumulation can be taken into account. The other thing which, since we do need money to put into CapEx, both at the airports as well as in the asset accumulation, and many of the equipments which are very heavy duty equipments which are brought in by the navigation sector of the airports and other operational equipments for air traffic control, etc. I'm tempted to reach out to to Indian Railways Financing and tell them that out of the huge amounts of lakhs of crores which Amitabh Banerjee spoke about, whether we can have a multimodal model here, where the capex of one sector or the finance ability to raise good finance by one sector can be utilized in another, which is again a leasing large asset leasing sector, and maybe there can be resource pooling. I did hear him say that the capital adequacy ratio is hugely high. It's way, way beyond. And so, I'm tempted to say that, we're there and we can help you reach to a good equilibrium on that as well. So, but let me come to some of the other issues that we spoke about. So aircraft leasing, we started bringing it into India only 2 years ago when we realized that aviation sector had never bothered to think about it. And I don't want to go into history, but looking forward, we got into the act right away, and a working group was formed under my chairpersonship. And Vinod Kothari was there as one of the members of my working group. And we had the Boeing, we had Airbus, who are the main OEM partners. We had the other ministries, because the regulatory system is so huge. It encompasses commerce, it encompasses finance ministry, RBI, through and all wings of the finance ministry, revenue for tax reasons, for Department of Economic Affairs, for financing, and so on and so forth. So we worked very swiftly. We came out with a report in 6 to 7 months, which was very detailed. The project is interestingly titled Rupee Raftar, because we wanted to bring rupee financing also into the fray and not just have lessors established out of India. I won't go into the details of what all we came out with, but let me tell you what are the successes that we have achieved thereafter. So the entire implementation action plan, the entire set of recommendations of the Rupee Raftar working group were accepted by the government. And there are 2 sets of committees, one at the level of the Honorable Minister of State for Finance, that there is a task force which has been looking at how to coalesce the work we had done with the development of the International Financial Services Center, which is at Gift City, because we needed to create an offshore tax regime structure which mirrored tax and regulatory regime structure, which mirrored at best the main competitor, which was Ireland. And secondly, there was an inter-secretarial committee, a committee chaired by Secretary, Department of Economic Affairs, and my own secretary, which had all the other ministries, and we worked out a full regime. Now, within this, we have by and large solved the GST related problems. Very interestingly, we were able to get complete exemption from corporate tax for a contiguous period of 10 years out of a block period of 15 years for any aircraft leasing, which sets up in the IFSC. Thirdly, Gujarat government has removed the stamp duty just last month on all leasing transactions out of aircraft leasing and financing transactions out of IFSC. There are many other changes which have been announced. Notably, we have been able to lease out 2 India-built aircraft to an Indian, through an open bidding process, to an Indian airline last year. Last year meaning the deal got firmed up in December or so, and subsequently the pilot training and all other facets have been going on. We've been also interestingly been able to lease out 1 ATR from, again, an Indian lessor to an Indian entity. We have been able to lease a helicopter Here, the interesting part is that the SPV or the special vehicle was formed in Mauritius, but all other aspects, including the MRO aspects, are to be done in India, have been done in India. Now we are working with 2 leasing companies who are ready to set themselves up in the Gift City ILFS and work on. I will touch on just 2 small things before I allow the moderator to take over. I didn't think I would talk for so long. One is the fact that even under COVID conditions, we saw the expansion of the aircraft fleet through leasing, which shows that the model that which actually confirms something that previous speakers had been saying, that this was their experience out of the sales arising from the US as well, that if you were offering a lease, then your sales as a company were not impacted. So here I'm talking from the demand side, that obviously even cash-strapped airlines were willing to take new aircraft on lease. And the kind of lease terms that they managed to secure were phenomenal, simply because there was a glut of aircraft which are not presently flying. And the lessors could then be persuaded, or the negotiations could fructify. The second is in the after-sales market, which is something that was spoken about. The Government of India, and we know this is not an initiative that we looked at developing when we were working on the report, but we are in the process of aircraft leases happen in multiple stages. So apart from the regulatory system, to enable releasing, we have developed guidelines which will facilitate repossession of the aircraft and releasing without wasting the kind of time that was spoken about by one of the previous speakers. And also the fact that we are also enabling the end of life of an aircraft parts harvesting within the country, which is something that had not been done earlier. So I'm happy to report that the first aircraft whose parts will be fully harvested out by an Indian MRO in conjunction with a leasing company will be done at Chennai, or it has already been contracted. So we are trying to put in all the little pieces that go up to make the entire set of ecosystem for aircraft leasing and financing. I've gone into it a little bit at length, and I'm willing to take questions and answers on this as well, simply because it's a new business. It's one of the most lucrative businesses in the world. I don't see why Indians, which are full of Jains and Banyas and Gujjus and Parsis and so many others, whose preoccupation is making money, why are you not there in aircraft leasing and financing? Even in the global financial crisis, this business was giving the lessors and financiers at least 15% annual returns in dollar terms. This is under a financial crisis. You can imagine what it will give you if you're not in a crisis. So as I said, I invite everybody who loves money to please come and invest in the aviation financing business. And to my friend Amitabh Banerjee, please let's work together. And I also say this because one more last thought, and this is an important one. Aircraft financing and leasing is being recognized as a financial service to be supplied by the unified regulator for the regulations in the ecosystem of the IFSC. So that unified regulator is another fabulous concept which will help. And if this is recognized as a financial activity, I will leave it to the panel to tell us all what wonders can therefore come out from it. Thank you. I hand over to Mr. Tambe.
Thank you very much. I think it was interesting to understand the opportunities in the airline segment, and I think it's quite an intriguing thing to know that a lot of entrepreneurs are not getting into airline leasing. Quite an opportunity you have highlighted. Thank you very much.
No, the smaller ones are, but the big boys are not coming. What we need is the chappie is sitting with lakhs of crores of money.
Sure. We move to Mr. Kothari next. Hello. So, Mr. Kothari, it's a lot of people were talking about regulations and regulators and policy framework. You've been a veteran in this and been doing a work over the last many decades into this. We would like to really hear from you as to what do you think should be regulatory enablers? Let's call them enablers, because that is what could be the regulatory enablers, the policy enablers to really take this industry to the next level, not just incrementally, but in a leapfrog manner. Because today we need some regulation which can really take this industry in a leapfrog manner, because we are talking about increment progress for many years now. And I think that time is over. We need a leapfrog.
Correct. Right. Thank you, Mr. Srirang Tambe. And Vandana ma'am, the kind of energy and the kind of gusto that you put into the topic invigorates all of us. And it's very heartening to see that whereas in terms of statistical analysis, the extent of leasing that we have in India is quite a fraction of what we have world over. But we have huge amounts of lease transactions of extremely esoteric, sophisticated nature being done by Mr. Banerjee's company, also by the number of leasing companies that Vandana ma'am has been able to attract into the gift city, and smaller levels of operators of leasing of two-wheelers or four-wheelers or all kinds of retail assets. So the momentum has actually picked up, and Mr. Srirang Tambe himself being into this business would agree with me that the scene has changed over the last 6 or 7 years, and the extent of interest of entrepreneurs into leasing business has really increased. However, as we have been talking since morning today, there are regulatory snags in the country. And I think every speaker who spoke since morning has talked about taxation, the non-level playing field in taxation, particularly in terms of GST. And Vandana ma'am was talking herself about one of the issues, but the other issue importantly is the discrimination that taxation system does between a financial lease and a loan transaction. Now, this is where we have a starting point of the issue in India, because if you look at international data, the extent of operating leases will be barely 10 to 15% of total lease transactions. In India, as people talk about leases, the only lease we talk about is operating lease. Financial leases hardly exist in India. Hire purchase has virtually disappeared. It's only in Santosh Parashar's leasing summit. Otherwise, hire purchase is virtually not there. Now, the reason why financial leases and hire purchase have just exactly disappeared is because there is no GST we pay on the interest component of a loan, whereas we pay GST on the interest component of a hire purchase or financial lease transaction, which from a taxation or accounting perspective have admittedly been taken at par with loan transaction. So how can you probably have something which is at par with the loan yet not at par with the loan when it comes to taxation? If we say that we accept that the substance of the transaction is funding, taxation cannot be deviating from that substance and pick up the form of the transaction and impose a tax solely on the form. So form versus substance has been the dilemma forever, but it's an admitted principle that once we admit that the substance of something is financing, we cannot still stick to form when it comes to taxation. So that is what leads to a non-level playing field, because lenders or financiers who choose the secured loan format do not have to pay GST on the interest component, whereas a financial lessor or hire purchase vendor will have to pay GST. The second problem which Vandana ma'am mentioned is extremely important, and if there is a solution around that, I think everyone would be grateful to Vandana ma'am as well, because she talked about an important issue of accumulation of ITC. Now, not just in case of aircraft lessors, but in case of every lease transaction, there will necessarily have to be a tremendous accumulation of input taxes, because you continue to buy equipment and you pay GST on the purchase price of the equipment. Now you lease it out, you have lease rentals periodically, which is merely a fraction of the cost of the asset. So year on year, you have more of GST paid on inputs than the GST payable on outputs, and therefore you have an accumulation of input taxes. how many years would it take for you to actually recover the input taxes? If you do a simulation, I'm sure it would not be for 10 to 15 years. And if your business continue to grow at a particular scale, you can forget about getting the set off of the input taxes at all. So if that's the scene, what am I actually doing? I'm paying taxes to a government on inputs, which actually was done on the promise that that tax is merely a set off. But the set off is not a real, it's not a reality, it's an illusion. And it's a moving target as we continue to grow volumes. So that's something which also needs to be addressed, because at some stage, once the input taxes reach a certain scale of the output taxes, there must be provision for refund. Otherwise, the burgeoning input tax credits will continue to affect the financial health of the leasing industry. That's one regulatory issue that we talked about, which is a very, very lopsided taxation of lease transactions versus loan transactions. Another point which is also very significant is that whereas we have a priority sector sort of promotion system, we have a financial inclusion philosophy which is based on encouraging priority sector lending. Now, priority sector funding can come in two ways. Once again, by way of a loan, it could also be by way of leases. A loan given to an MSME qualifies as a priority sector loan, but a lease given to an MSME will not qualify. Now, that's another, I would say, strong disincentive for people to be looking at leasing as an alternative, because it does not have the benefit of the priority sector tag. And the priority sector tag helps a lot because at the end of the day, you are able to securitize or sell off priority sector financing portfolios to banks at a fairly competitive rate. A third issue, which is also very important, is that we have a range of microfinance entities which provide funding to the so-called bottom of the pyramid segment. And there again, the current definition of microfinance admits a loan transaction only, while the noted intent of a microfinance company is to provide capital equipment. You provide basically a cart or a rickshaw or a kind of a small carpentry tool to a carpenter, most of which are capital assets. So why is a microfinance entity forced to give a loan, whereas it actually can provide capital equipment to the bottom of the pyramid segment? So there again, the definition of microfinance has to change to allow the leasing of smaller capital equipment as well. There's yet another regulatory issue, which is basically having to do with the EPCG benefits. This is coming out of the annual foreign trade policies of the government. And those who have been conversant with the issue would realize that somewhere in the 2015-16 period, whenever the foreign trade policy was written, somewhere there was potentially an error in writing the policy, and the benefit of EPCG credit was somehow denied to funding of the import by way of a lease. So that if you're funding an import by way of a lease, then the benefit of EPCG will be completely lost. It will not be given either to the leasing entity, which is obviously not logical, but it will not be given to the lessee either, because the capital equipment was acquired on the basis of a lease. So this is also greatly disincentivized leasing of those imported equipment where the importer is eligible for an EPCG benefit. So I think these issues that we talked about today are not new. We've been talking about these. I think the last summit also we talked about these, and I refer to the IFC report, which has been on table I think for almost like 5 years now. These issues were talked about in the IFC report as well. None of us had the kind of energy which Vandana madam had, and she was able to convince whoever it might be, including the state government of Gujarat, to obtain a stamp duty exemption. None of us had that kind of energy, so we couldn't manage to get, I mean, the regulatory issues resolved. But she was able to create a level playing field for a leasing of aircraft to happen from out of India. But I think we need to ultimately realize that if the issues are clear and they're revenue neutral, they're not causing a damage to the government anyway. They would encourage MSMEs to resort to leasing. They would promote leasing in the country. They would do an overall good to the country. So if that's the real case, that's the real cause, there is no real reason why we should not succeed in resolving the difficulties. I think at this juncture, I'll probably stop here and would probably look forward to more interaction with the panel. Shirangji, over to you.
Thank you, sir. We anyway have a question and answer session at the end, but we'll first move on. Our next is Ms. Sarika Gosen on accounting standards. Sarika, to you on accounting.
Yeah, so first of all, I would like to extend my thanks to ASSOCHAM and Santoshi for organizing this event, and thanks to Mr. Thambe for giving me the platform now. So I would request to allow me to share my screen, because to do justice to my topic, I wanted to share one small presentation with all of you so that I can be sure. So please let me know if you can see my screen and am I audible?
Yes, you can see your screen and you're audible.
Yeah. So my brief topic for today in the given time is the impact of Ind AS on hire purchase and leasing companies. So briefly, we will discuss some of the general provisions, the format of financial statements which are applicable for these companies, then overall impact of Ind AS adoption on these companies, the new standard which has become applicable 1 year back. There has been a recent amendment due to COVID situation for the lease rentals. So we will briefly discuss that amendment and how it is going to impact the companies at large in India. So general provision, if we talk about these companies, by and large are NBFCs, unless these are exempt from the registration requirement. Ind AS has become applicable on these companies in 2 phases, from 1st April 18 and 1st April 19, depending upon the net worth and the status they had. They have to follow a format of Schedule 3, and there is a new Division 3 which has become applicable for NBFC companies, and this is fully or almost complied with Ind AS. Though NBFCs are under the sole jurisdiction of RBI, but MCA did not exclude these companies like banks for mandatory application of Ind AS. So banks, there is no applicability of Ind AS currently, this has been deferred. But NBFCs have been applying Ind AS for past 1 year now. If we talk about the current format for financial statements applicable to these companies, this is governed by Schedule 3 Division 3. So these are applicable for Ind AS compliant companies. So the third phase companies which are not so far covered under the Ind AS regime, they will continue to apply the previous accounting standards. The balance sheets are now to be classified into financial and non-financial asset, liability, and obviously equity. Assets and liabilities can be presented in the order of liquidity. Profit and loss account, there is a new item called other comprehensive income, other than the ones which we used to see. There is a new statement of comprehensive income, cash flow we always saw. The format has become flexible to incorporate any of the overshadowing requirement of any regulation or law, which is largely RBI. There are some differences between this schedule and the other schedule which are applicable to other normal Ind AS companies. So if time allows, we will discuss those differences. If we talk about the overall Ind AS impact on these companies, so there are a couple of things, items, captions which have undergone significant change because of Ind AS adoption on NBFCs. Expected credit loss model is something which has impacted hugely NBFCs. Then employees benefit and share-based plan payments, income taxes, effective interest rate. Segment reporting obviously has also undergone change. Business model assessment, how they will go, how they will function, it has also undergone change. Financial instruments and accounting for derivatives is the biggest area which has undergone change for NBFCs. Interest on NPA is something which needs no less mention. Fair value is something is embedded everywhere, so NBFCs are also not excluded. If we talk about a new standard which has also become globally applicable, we will just talk about. So if we talk about the previous position, AS 19 was applicable for non-Ind AS compliant companies. Ind AS 17 was applicable for Ind AS compliant companies. The basic premise of that standard was risk and reward model, and there was a shadow accounting for lessor and lessee, and there was a distinction between finance lease and operating lease. So this is how my balance sheet used to look like, but please make a note of it that this is for lessee, not for lessor. So we used to have assets and liabilities in case of finance lease, But in case of operating lease, because only since the risk and reward was not transferred to the lessee, therefore all or most of the lessees remained off balance sheet, and there was nothing as such as assets and liabilities in their balance sheets. But now, due to introduction of IFRS 16 globally from 1st April 19 and in India, I'm so sorry, IFRS 16 applicable from 1st January 19, and the replica of the same, which is Ind AS 116, which is converged with IFRS 16. It is applicable from 1st April 2019 in India. It revolves around a control model. So the risk and reward model, which we used to study, has gone forever. Lesser accounting, I should focus on it because NBFCs are lessors in most of the cases. So lesser accounting largely remains unchanged. Why the lessors or the NBFCs will get impacted because of this new standard we will discuss on the last slide. Lessee accounting has significantly changed. So most of the leases going forward will be there on the balance sheet of the lessees, except for two circumstances when these are either low value or these are for short term, which is less than 12 months. So if we look at the revised balance sheet positions for lessee, in case of finance lease, there will be no change. In case of operating lease, if it was off balance sheet earlier, now both of these will be shifted to balance sheets, in the assets and liabilities. So that's a huge change. So going forward, the lessees have more liabilities. They are heavily debted. At the same time, they are asset rich as well, because off balance sheet leases are now moved to balance sheet. If we look at the income statement impact, so earlier finance lease we used to have depreciation and interest, but for operating lease we used to have single lease expense. So this single lease expense has been bifurcated into two as depreciation and interest in the balance sheet for lessee, and therefore my EBITDA will significantly go up because there is no operating cost above it, and my operating profit will also undergo change in the upward direction, and largely over the period the profit before tax will remain intact. But here if we talk about in the initial year, since the balance sheet has got asset and liability more in the initial year, so these expenses will be front loaded in the initial year. Therefore this equation wherein I am saying that profit before tax will be intact will not be true. So this is over the period. If we talk about cash flow statement, earlier we were showing it as operating activity, but now we have to show it as financing activity. Therefore my operating profit will go up and my financing profit will go down, but my total cash flow will remain intact. If we talk about the current scenario due to COVID, most of the lessors have extended rent concessions to the lessee. Therefore, MC has provided a relief to the these leases where the lessees can choose not to do modification accounting. So what is modification accounting? The people who are doing it would very well know, and we don't have time to discuss that. So I'm just telling you that this impact is there, and this is a relief for lessees that they can choose not to account for modification accounting, which was a big relief for lessees. However, this is only applicable for the period being the order after 1st April 2020, or if the financials are still open for the previous years, they can also choose this. If we talk about industry-wide impact of Ind AS 16, because it's almost 1 year that we can experience the impact of IFRS 16 or Ind AS 116. Last time when we had the similar seminar organized by ASSOCHAM, we were just anticipating. So now we have statistics with us. So as Vandana ma'am said, airlines is an industry which is hugely impacted. Then next come retails and multiplex, then telecom, healthcare, logistics and warehousing, hotel industry and IT. So in the order of impact, we have collated this data. So this is based on some study which has been done by a researcher. So airlines are the one which are mostly impacted. So if we see, so this slide was basically with respect to the companies who were acting as lessee. So if we talk about the companies which are giving the items or equipments on lease, that means for lessor. If we see, as I initially told you, since there is no impact on the lessor per se, so the impact is largely because of how the lessees have behaved post introduction of Ind AS 116, because for lessee a lot of things have undergone change. So how the lessees behave in terms of taking the items or lease, etc., there is an indirect impact on the lessor. Otherwise, accounting wise, there is no impact on them. So lessors had to evaluate their existing portfolio and the prospective ones as well, depending upon how the lessees behaved, and they had to take strategic modifications to their portfolio. So some of the expected possibilities that impacted lessees or lessor rather was, there have been requests from lessee for shorter lease terms and lesser lease payments, etc., which increased the risk for lessor because there were variable lease payments. Next could have been, there was challenging situations for some of the lessors where higher lease rates could not be demanded from the lessee. Therefore, there was an increase in the cash flow volatility, and therefore there was a risk. And because of which, lessors were impacted on their ability to obtain favorable financing on their own investment from the bankers and other financial institutions, because there was a cash flow volatility and other risks associated. So I think this is all with respect to accounting impact. I'm sure I was a little fast, but that was in the interest of time. So over to you, Mr. Tambe. Thank you so much.
Thanks, Sarika. Sarika, just one question on this before we move on. I think there's an exception created for companies less than 250 crores of net worth for the implementation. Is that so?
Mr. Tambe, your voice is not clear. Can you please repeat the question?
Yeah. Is there an exception created for implementation of IFRS 116 for companies having lesser than 250 crores of net worth? Is that understanding correct of the people?
No. So actually what had happened, Ind AS 116 or IFRS 16 provides two exceptions wherein no operating lease will be brought to the balance sheet of the company. However, so if either it has to be less than 12 months, so if any amount lease is less than 12 months, you can take that exemption and you don't have to bring that asset to your balance sheet. The second exemption is low value lease. In India, that low value has not been defined. IFRS does define it $5,000 or so. So in India, people have taken their own view to take a low value, but from ICI side, from MCA side, no value has been so far assigned. So it has become a practice and people are observing how the peers are going about it. But though no value in terms of net worth, etc., is applicable in terms of IFRS 16 exemption.
Thank you. Thank you, sir.
Yeah.
Moving on, I would move to Mr. Raman Agarwal. Good afternoon, sir. Mr. Raman Agarwal, you've been a veteran of the. Are you able to hear me? Yeah. You've been a veteran of the industry. We would really like you to share some thoughts on how do you see Indian leasing industry vis-a-vis the global industry and how much catch-up we need to do. And secondly, just an extrapolate a point as to with what most of the people were saying on terms of financing. Mr. Vyas said about financing the lease agreements, Mr. Kothari said about PSL. So in your experience, how do lenders and credit rating agencies view this business and what can be improved in that scenario?
Thank you. Thank you, Mr. Tambe. And I think this is a subject which Mr. Kothari is here would know we have been talking about for quite some time. In fact, I don't know if how many of you would know that till about 2001, hire purchase was a bread and butter product of the entire NBFC sector. Because if you talk about, NBFCs owe their origin and genesis to starting with vehicle financing, and that too, the commercial vehicle financing, the truck financing was something which was perhaps the first thing in addition to gold loans, wherein NBFCs played a role. And hire purchase was in fact the only mode of funding being used because of obvious reasons we've already discussed. I need not go into it. And as I've already been widely said, that things started changing in 2001 onwards, obviously because of this whole issue of introduction of levy of service tax, which was levied for the first time in 2001 and in their own wisdom. So this taxation issue started, which really did a body blow to the entire concept of leasing and hire purchase in India. And as Mr. Kothari said, that now hire purchase actually seems to only exist in summits and is no longer in practice, because obviously people find a simple loan transaction to be much more viable and simple as compared to, So I think the real issue lies, of course, with taxation. I think need not see repeat it. We've seen the dual taxation. Let me also share, there is another very important aspect to it, apart from the indirect taxation issues talked about here, whether it was VAT, service tax, and now GST. When you talk of direct taxation, our experience in the industry has been that the moment an assessing officer sees a lease in your books, there is a sudden amount of alarm bells which start ringing, and they start viewing you with suspicion. So the mindset is that somewhere lease is tax ki chori. And that is where things get really messy, and they've really been messed up over the years. And we've had a plethora of litigations going on. I mean, if I could quote you in my own personal company case way back, which went up to the Supreme Court, a simple issue of allowing 40% depreciation that time to the lessors on commercial vehicles was simply argued on the fact that, boss, you are not yourself running the vehicle on hire. It is the lessee who's running on hire, so we cannot allow you full depreciation. In spite of the Supreme Court throwing that case in first hearing, next year again the same issue is raised. So that mindset, I see Vinodji very rightly smiling, the mindset of the taxation officers is something which also needs to be really changed. And I think to that extent, such summits and events could play a very important role. So that is a very, very critical element. Now, if you talk about internationally, globally, of course, see, let's understand, I think another very, very important factor has been the lack of clarity when it comes to leasing. When I say clarity, not amongst people sitting out here, they are all experts and we've heard them views, but clarity when it comes to the policy makers, the tax officials. And that is where the real, confusion starts. So if you draw a parallel, now look at a country like Russia, which has a federal law on leasing. And the 4 legislative reforms which were done for leasing was, to first clearly define a lease contract, leased assets, responsibilities, rights, etc. Abolition of the law for licensing of leasing a company. So they said no more licensing required for leasing companies. Anybody could just get up and start doing leasing. There was a favorable tax policy to the extent that the lessee is allowed a tax deduction over the lease rentals with the VAT which he paid, and there is a tax deduction allowed. So there is a clear-cut legislative and policy maker backing which is available. Similarly, a country like Uzbekistan, they have a Uzbek leasing company where IFC played a key role, and they helped in amending 11 pieces of legislation to facilitate leasing in that country. A country like Rwanda, because where they had those coffee growers, and they need, coffee beans need to be quickly reached up, washed away and sent to the market because they are very short shelf life. So a special bicycle having 8 gears with a special shelf to carry those coffee beans was built up, and these were given on lease. So there have been so many examples. Tanzania, even developing countries. So it's primarily the mindset which has to change at the policy level to create a favoring legislation, to create a favorable tax regime, and more importantly, to create a favorable mindset towards leasing, and come out of that mindset that leasing is some kind of a tax avoidance or a tax chori. It's or rather than being a tax deferral, maybe in some cases. So I think that is the most important part I would like to highlight. Now, however, coming to, Madam Sarika Gosain very rightly touched about Ind AS. Unfortunately, the companies, of course, we all know leasing and hire purchase in India is all done by NBFCs. And Ind AS gun has been shot based on a post, put on our shoulders. So all the confusion, imagine that it took 2 years for the regulator to issue the first piece of notification or circular on Ind AS applicability, how to implement it. It was made applicable from 1st April 2018, and it was only on 13th March 2020 that we had the first circular being issued by RBI about the implementation of Ind AS. So that was the kind of confusion which was there in the market, whether it was ECL, and over it, if I give you one example, even today, what RBI says is that, boss, based on ECL, if your provisioning is lower than the IGAP norms, then you need to create that balance and transfer it into a separate reserve. I mean, so you are actually asking us to sail in both the boats. And that is where the confusion, there is plethora of confusion when it comes to Ind AS, and it goes on. I need not go into the details. Now, coming to, I think, the points which you very rightly raised, and I think Mr. Kothari also touched upon. Apart from all these tax issues and the mindsets when it comes to policymakers, there is also kind of confusion. Now, let us look at COVID-driven. What was the first relief given by the RBI? It was moratorium. Now, there was a confusion whether this moratorium will be applicable to even the lease contracts. We had a lot of companies calling us and asking us at FIDC that whether can we give moratorium to our lessees, because the RBI circular only talked about loans, the lender and the borrower. They never talked about any lessor lessee. Similarly, we had this issue of course, Vinodji touched upon on the priority sector. I mean, recently the priority sector lending norms have been amended. To my mind, I tend to differ with his judgment. To my mind, PSL should be applicable. However, since there is no clarity on the terms of being, in black and white, banks are taking it there, drawing their own conclusions. Some banks are simply saying, boss, there is nothing mentioned about lease contracts in the RBI circular, so it only talks about loans. I cannot allow you a PSL status. So this is where the things are being gray. Then of course refinancing, and that was also pointed by, I think, some of the earlier speakers. When I do a lease contract, am I eligible to avail a back-to-back refinancing from the banks against that? Is again something which is a big question mark. Now, finally, having said that, let me show that there has been I see some ray of hope, because just before the lockdown happened, I think DPIT was in the process of having a lot of discussion on the new industrial policy. And fortunately, in one of the such discussions and meetings, I was there. And when we draw out, because the real focus of attention of the policymakers today are fortunately the 3 key sectors where leasing plays a key role, that is infrastructure, agriculture, and MSMEs. And in all these 3 sectors, I think lease has a very important role to play. And so when the new industrial policy was being discussed about, when I voiced the need to revive or at least encourage leasing in India, I saw some bells ringing, and subsequently we did submit a detailed note. So I only hope that maybe we are heading towards a day that finally there may be some sense of positivity coming both from the policymakers and the tax officials going forward. Thank you.
Thank you, Mr. Agarwal. We could definitely see the passion and the eagerness to bring a change in the segment. The way you put forward the points, I think it's really long overdue. Moving on, I will come to Mr. Amit Dang. Amit, we've heard a lot of challenges. Now let's look at the next 2 speakers. We have Mr. Amit Dang and Sandeep. Let's look at opportunities now in the last 2 segments. So Amit, with all the what we have spoken about as a framework or restrictions, so-called contours to work with, where do you see opportunities? How do you think people should grow their business? What are the green shoots? What are the areas where you can still tap and grow? So let's look at the other side now. To you, Amit.
Yeah. Firstly, thanks a lot to ASSOCHAM and Mr. Tambe and Santosh Parikar for inviting me for this technical panel session. So a big thank you for that. And I must say that a lot of it, which was there in my mind, has already been covered by most of the speakers. But still, I would say that, you know, if I have to look at potential going forward, uh, firstly, if globally, you know, if you look at US or we look at Europe, the usage of India for any form of capital purchases is in the range of 20% to 30-35%. In India, it is still less than 1%. So which means there is a huge potential. And when we go back to 1970s, when we didn't have the problem of taxation, which we are, you know, facing now, and now we are embarking on the journey of simplification. Clearly, if the policy makers do the simplification, the underlying potential, the true potential of leasing will come back to India. So that is one area. The other pieces which Vinodji has spoken already, which was around the GST simplification, looking at various concessions. And one of the things which I believe he missed out was around the subsidies, you know, the new industrial units when they are set up in the key export zones or the new zones which are set up. The leased assets are not given the benefits for the purposes of, you know, as we look at loan assets. So there is a, you know, improvement area from a policy side of it. In terms of the pandemic related environment, I would say that since leasing now, if you look at from a millennials perspective, it is going to end users. If you look at industry perspective, since the capital outlay from leasing is much lower, and there is a big game plan around RVs in terms of pay for use, I think clearly that's a space the Indian economy has to move. So that's where post-pandemic environment, when we have less cash flows, I see coming from a Shrey infrastructure or a equipment financing environment, I see there would be significant second-hand market coming over, and second-hand assets for the secondary lease, there is a big opportunity. Even from the first-hand equipment, if we do pay for use, typical work orders are anywhere between 24 to 36 months. So people take these assets on an operating lease, and at the end of 36 months, they return it back, and then these assets are transferred to the other users. I think there is a huge opportunity in that space. Post-pandemic, India also had, you know, seen that as a country we were struggling around the healthcare sector modernization. So healthcare sector having the right surgical diagnostic equipment, having the right ICU centers, having the right level of ventilators availability. So the entire healthcare sector has a huge potential in times to come. Social distancing is another key area, you know, because of that now people are looking at having their own vehicles. So getting their vehicles on rent, now I see there are a number of these tech companies coming where they are saying pay for use for cars, pay for use for bikes, and a few of them are also participants in this, like the Auto Capital, and I see Origa also here. So I think these are the areas which are future for us, and we can look at capitalizing on the opportunities. Also from the environment side, I would say solar and home delivery has picked up in a big way. So logistics equipment and the underlying equipment from the technology side of it. Earlier it was largely laptops. Now I see even mobile phones. There is a big opportunity for pay for use for that, because after 2 years or 3 years, you can now go back to number of platforms where you can resell the equipment, or you can change the equipment, or you can upgrade your phone on a regular basis. So technology, the underlying infrastructure sector, the medical sector, the logistics sectors, these are all sectors where one can look at using leasing from a post-pandemic environment, and obviously the vehicle segment and the CV segment. So I think from a rental side of it, there's a huge secondary lease RV play which can be worked upon, and pay for use is a new model going forward. So with that, I move it back to Mr. Tambe. Thank you for the opportunity.
Thanks, Sandeep. Thanks. Sandeep, we come to you. Hi. So Sandeep, you are in a very interesting position because the product that you deal in majorly, the auto, has the from a leasing point of view, has the largest liquidity in the market, so-called. The secondary market, the liquidity, the throughput, right, compared to any other equipment class. Maybe IT might come closest to that. So there's a kind of a product excitement there. Plus Oryx has it's a Japanese company, so you've been privy to a lot of exposure in terms of how leasing has grown in Japan. Japan Tokyo Stock Exchange is the only country where more than 10 leasing companies are listed. I don't see any other stock exchange in the world where leasing companies are listed. So having seen this entire gamut, what really excites you in terms of what opportunities lies ahead, keeping for a moment keeping aside all the issues that we have discussed, but how do you see what opportunities lies ahead, and especially what still can be brought into India, which has really succeeded in the developed world and can go a long way? So to you, Sandeep.
Yeah, thanks, Riyan, and thanks, Santosh and ASSOCHAM, for getting me on the panel. It's always interesting to look at a lot of eminent panelists discussing their perspectives. It was actually for people who've been, I see 293 people still hanging around there. So I want to thank all of them that they've had the patience. They were hoping something good is coming. But for the ones who joined early and they're still around, it was very enlightening to hear to General VK Singh. And I was pleasantly surprised to hear from him that the leasing as a concept is something that's not been marketed very well. So there is an understanding at his level. His understanding was probably much higher than what one would have expected from a lot of people who still think, like Ramanji said, that for a normal tax guy, leasing is a way to evade tax or defer tax. So the concept of leasing, and I think the onus is on us, like industry leaders or captains, as he mentioned, being from the army, that yes, the onus is on us to try and propagate the concept very well. And the other important thing that he mentioned was catch the opportunity and make profit, because there is no business that can be sustained for a long term without adequate returns to the various stakeholders. Now, with that as a background, I'll jump into your question straight away. That yes, Oryx is a Japanese player. We happen to be the largest leasing company globally. We also happen to be the third largest aviation leasing company in the world. In India, we are the largest passenger car leasing company. So you're right, in terms of the asset class that we lease, we seem to be in a comfortable position given what is happening in the auto industry in India as well. Auto has the tendency to catch the headlines, and the headlines have been good for the last couple of months. If I were to say about our leasing business as well, it's bounced back much faster and much stronger than many of the other businesses that we do in India. We are a diversified conglomerate in India, and leasing happens to be our largest business, and car leasing has bounced back very well. What is important from to draw differentiation between what happens in India versus globally, the global penetration, as even Amit was mentioning, the global penetration of leasing is very high double digits. Depending upon the country, there are countries where it is as high as 40-50% in Europe, whereas in India we are still hovering around in the range of 1 to 2%. And the reason for that is not just the tax authorities, even a lot of users think leasing is a tax benefit product. It's not being sold or marketed as a product which is a pay-per-use. I mean, I'll again draw a reference from what Amit is saying. Globally, there is a lot of realization that it's a depreciable asset. At the end of the day, you don't want to own everything. We should own things that appreciate in value over a period of time. Whether we talk about cars, whether we talk about motorcycles, laptops, desktops, IT equipment, or whatever, these are assets which have a finite useful life. If people can start embracing that, I'm going to move to a pay-per-use model rather than paying for ownership, and the cost of ownership versus cost of usage, there is a big differential, and the cost of usage is far lower than the cost of ownership. Most of us working in metros, the only commute that you would do on a daily basis is office to home and back, or the reverse actually. Nowadays, even that is not happening. So now imagine the cost of owning that car which is parked for 6 months in your garage and you have not moved out of your home. It's still depreciating. You go and sell it after 4 years, it may have lost 20-25% of your value in the last 6 months in any case. For somebody who owns a large car, you will figure out you're actually paying 100 rupees a kilometer if you were to effectively compute the cost of owning that vehicle. Whereas there are cheaper, better models of now owning or not owning, using that, because people need vehicles to commute. I don't think the vehicles fulfill a need of the basic need that a vehicle today is giving is of commute. And if we can come out with better or newer ways aligned with global standards, that's the way forward. You can talk about subscription. That's again a global concept. It's nothing but lease being repackaged and remarketed in a better word. It seems to be the buzzword, like Amit was mentioning. There are a lot of rental companies that are coming in. They're just repackaging leasing in a short-term format, giving it a different name, and that's what we see catching up. The good thing is today the ecosystem is being built up. If you talk about leasing today, you have a Maruti talking about leasing, you have Honda, Toyota, Mahindra's, MG of the world, everybody talking about leasing. What is that doing is the customer knows there is a product like this that exists. And we're talking about retail lease. We're not just talking about corporate lease, which has always been a tax-friendly product which the salaried employees lap up. Or we're talking about subscription, which is nothing but another short-term lease. Own a car for 2 years, 1 year, drive it, then upgrade to a newer model without any hassles, convenience-free, insurance, maintenance, all baked in. So those are global concepts which are very well established. I mean, I remember speaking in the earlier ASSOCHAM conference on this. Buying a car now is not bringing a new family member home. Earlier it used to be. Everybody in the family will go and they'll choose the color also of the car and everything, as if you're getting a new family member. Now it's a mode of commute. You buy a car for 3 years, it outlives its useful life for you. You upgrade it and you find a new useful life from the lesser standpoint. So there are a car having a 7-8 year useful life. You'll find multiple use cases. 3 years I'll use a new car and then I'll pass it on to somebody who probably has a lesser capacity to pay, uses a used car, and then I find a third buyer and eventually the car gets sold. Those are the international norms of how usage patterns are changing, and eventually we will see India moving towards that. It's a slow move, but from where we look at it, it's a gradual shift happening. With more and more manufacturers coming into the play, the customers getting educated. If it earlier used to be one leasing company, one manufacturer tying up, it wouldn't have sold, because a lot of amount of money would have been spent to educate the customer about the concept. Now, if every manufacturer is marketing a retail lease or a subscription, the customer is becoming aware. Every time he walks into a dealership, he'll ask him, "Yeah, boss, the other manufacturer is showcasing this product. Do you have it? Do you have another option than a loan or a cash down payment? Can I take a lease where you take care of the insurance, maintenance, and give it back to me?" That's what is happening internationally. So we are seeing some of those steps being taken. We think it'll catch up soon, and we think it could become much larger from where it is. If you're at 1%, you can feel happy of 2% also, because that's doubling. That's still be low, but it'll be very encouraging, and people like Mr. Kothari are doing a great job in terms of helping us out in getting clarity on the concept, fighting with the associations, the taxation norms, getting more clarity for everybody, not just us as the lessors, but even organizations. So I see it as a great way to build up an ecosystem, and unless that ecosystem is built up, we are not seeing the traction that we would want to. The good thing is things are much better than what they were 5 years back, 4 years back. There is a lot of buzz around other forms of leasing, let's say. I mean, subscription, as I said, short-term leasing, used car, new car, 3 months leasing, 3 months short-term rental. They're nothing but leasing, where I own the asset and I give it to somebody for 3 months, and then he gives it back and I give it to somebody else. So the short-term rental companies are, in a way, creating a larger ecosystem where each one of us will play a larger role than what we do today. Your other question was on the whole RV concept, as to And that is where leasing companies play a much larger role. We're all talking about asset light, people paying per use and all that. That means somebody has to hold the can. So in all of this, each of the consumer can feel happy that I'll use it for 2 months, 3 months, 6 months, 1 year, 2 years. But there has to be somebody who has to hold the can at the end of the period. He has to take, unlike a bank where you go and buy an asset, whether it's a desktop or a laptop or a car, the bank is eventually taking a consumer risk. It's taking a credit risk largely on the customer. When you step in as a leasing company, you're obviously taking that asset risk, the individual risk or the credit risk on the customer. What you're also doing is you are very clearly taking an asset risk because the asset has to come back to you and you have to redeploy it. There is a dead pool at times when you're not able to redeploy it to somebody. You take a car for 3 years and I take the risk of redeploying it. I don't know whether the 36th month when you give the car back to me, will I have a user? So I have to develop a large ecosystem of people who are wanting used car leases. Or if not, then I'll have to find somebody who buys the car at a reasonable price. So apart from taking a credit risk that somebody is going to pay me for 36 months, I'm also taking a credit risk on the asset or the RV risk on the asset that when it comes back to me, I will be able to sell it at a reasonable price and I'll probably make some money. So the RV setting is a complete science in itself. I don't think you make more money when you lend. You make more money when you collect. So leasing is all about collecting money from the customers in terms of rentals and liquidating the assets. And as the market expands, both in terms of IT as well as the vehicle. So we are, as Oryx, while globally we are the largest leasing player, shipping, aviation, aircraft leasing, as Vandana ma'am just mentioned about, and everything else. In India, I think our scope is limited to passenger cars, vehicles, IT equipment, probably medical equipment are other areas that we are venturing into, and still some time for us to get into more products which are not very liquid. So we are kind of staying in assets which are liquid, which are easier for us to sell. What we are very clearly seeing is, and making the customer educated, is these are depreciating assets. The maximum potential these products offer you is the first couple of years, beyond which they outlive their use case for you as a customer. Leave it to us to find other use cases. You don't pay for the full asset. Pay-per-use model is something that we eventually think is going to take over. It's slowly and steadily catching up in virtually everything, whether it's a bike, a car, a laptop. I mean, people have stopped buying houses, they take rent. They're also realizing that the cost of usage is far lower than the cost of ownership. Today, you take a loan on a house, for a house, it doesn't increase. The rental yields are 2%, while what you'll pay is 8-9% with no capital appreciation for the last so many years. So if your need is just to stay in a house or to drive an asset or you to use a laptop, the pay-per-use models or the leasing models are something that will eventually outlast all of this. I hope that answers your question, Srinath.
Sandeep, just one more question, because in a quick way, because you're from that field, do you think leasing in electric vehicles will be a big hit because people really don't know what that animal is and they would want to test it out before they jump into from an ownership point of view?
Exactly. So don't call it an animal, it could be a feeder for a lot of us. So let's choose the word carefully what you're calling it. Yes, I'll just give you an example, take 30 seconds. We tied up with a lot of manufacturers doing subscription. We are the only one right now with doing subscription of Nexon EV. That's the only electric car in the country available on subscription. Thankfully, the GST, I can see Mr. Kothari nodding his head. It's only 5% on electric vehicles, so that also makes it easier to lease, and the comparison between lease and loan becomes better. You're absolutely right, because see, for a normal IC engine, people have seen the cycle. You can buy a Maruti car today, sell it after 4 years, you ballpark know what you'll get, and there is a large market of buyers. Electric, we still have not seen the cycle. People would be careful because they themselves don't know what the RV is. So it's actually companies like us and the manufacturers coming in together and putting some commitments on the table so that the product gets to see the light of the day. Otherwise, if any one of us doesn't take that risk, it will be difficult. because it's the cost differential between the two products is very high. So you're absolutely right. There is a great use case coming, especially on leasing for electric vehicles, and thankfully the GST, which is 5% there, is helping compared to the so-called sin tax. Or it's like I'm committing a crime buying a BMW or a Mercedes, paying 45, 48, 50% GST. It makes us feel like criminals. But I think we're doing a great service to all of us by buying electric cars at 5% GST. But yeah, you're right. There is a need for leasing to be there, and we are seeing customers appreciate that.
Good. Thank you, Sandeep. Thank you. Thank you very much. We move to Harivansh. Harivansh, thanks for your patience. You've been really patient and listening to all. So you're in a very different field. The whole idea to talk to you last was most of us out here will really either gray out or lose our hair going to the banks raising capital, but you don't do that. You are a platform. So that's a good thing for you. So we wanted to ask you in a different way. You deal with Gen X, Y, and Z. I mean, the terminologies which the media uses, right? You're with the Gen X, Y, and Z in terms of what Sandeep said. Take a two-wheeler, use it for a couple of days, give it back, etc. So how do you, two questions to you, how do you see this mind shift change in this pay-per use? Because you're technically a pay-per-use platform. Auto is a or a platform which gets lenders and buyers together, multiple functions. So how do you see this business model going forward, and what is the mindset change that you're seeing in consumer and the role that technology is playing in that? You are on mute.
Fine. So thank you, Mr. Tambe. Thank you, other panelists. Mr. Kothari is there, one of my mentor personally. Mr. Sandeep is there. Moreover, I believe that I have another 5 minutes to speak because it's been a long journey, and honestly, everybody has given the inputs on which I was supposed to speak. Most of the concerns are covered. Most of the issues are also being raised. I'll strictly jump into what Auto is doing and why Auto is doing this particular thing. So as we see in India, more than 1.5 crore bikes are sold every year, and we see a more than 50% penetration into financing. So yes, there is a huge scope. What we want to do is first of all, we have to choose our customers. So who are the customers? As you rightly say, the Gen X, Y, and Z, and when we call them millennials, why specifically they are coming to Auto, and what Auto is offering separately. So they are basically the group of people who are in the range of 20 to 35 years, who are mostly salaried, or few are the self-employed customers who have changed their mindset or developed a specific mindset with a change in the digital area coming in. So we say that millennials are very, very tech savvy. The perception about owning an asset, could be a scooter or could be a motorbike or maybe a car, everything is changing. A simple example, what a bike costs, normally below ₹1,00,000. So when somebody can buy a phone of 50,000 to ₹1,00,000 sitting at home using his smartphone, then why not a motorbike? What difference it makes? So this is a mindset with which we have developed a technology wherein customers can come and they can become a consumer for a bike. Let's understand what has changed in the mindset of owning a bike in comparison to leasing and owning. So as everybody has covered why leasing is important, I'll just take a minute to cover it again. So there were days wherein we used to love the vehicle. We used to own the vehicle for 6, 7, 8 years. We used to, the family used to go and choose the color, maybe in bike, maybe not entire family, but at least there was a love for the vehicle. So vehicle was not only a mode of transportation, commuting, it was also an asset and member of the family. This is not the mindset today. The mindset is I need a tool for commuting. So what I need to pay for it. Right now, as Mr. Amit also rightly said, that the consumers are wanting to pay less and use more. That's the specific mindset of millennials. How Auto is covering this gap is very important to understand. And with this, we have developed a technology right? I'll talk about the technology and why customers doesn't have to take much of efforts. Let's say in comparison to a traditional plan, he has to pay heavy down payments, have to pay high EMIs, and have to do the insurance renewals done, other papers done, and take care of the maintenance. All these hassles were there. Ownership enjoyment is there, but yes, it comes with a lot of hassles. So is Auto is able to cover this gap or not? That we'll have to understand. So what Auto is doing differently here is we have developed a platform which is completely web-based or an app-based. Now, let's say my friend is sitting at home. He wants to buy a particular bike. First of all, let's say he is new in the city. He doesn't know which are the prominent dealers are. But Auto's access is always there with him. Sitting at home, he can use my app. He can come on the platform. He can create his login credentials, and then he can choose his city, for what tenure he wants to use the vehicle, what color, etc., etc., right? So he has made a selection for the vehicle, the bike. Now we as an Auto, as a leasing company, need to do an assessment of the customer. So customer has been onboarded now, but we cannot make him, we cannot give additional efforts for doing the another process. So the assessment has to happen online. And at our end, the assessment process is 100% online. Customer can upload his documents. We will do an entire assessment, and within few hours, sometimes it is even 30 minutes, that we make the process get go very well, that yes, you have an approval for owning this lease or you don't have, right? So by this, I am making the decisions very quick. I'm not letting the customer change his mindset. This is not only helping Auto Capital, it is also helping the automobile industry overall, wherein through my platform, the decision of buying a vehicle or owning a vehicle is becoming very fast. Now, let's say the customer is selected, and now I have to do the heavy documentation. As one of the panelists was mentioning that in hire purchase or some of the leasing contract, there are 20 to 24 signatures what we have to do. Yes, it is a prominent way of doing the lease documents, but we don't do it. So what we have done is, like, our documentation signing the lease rental is completely online. We generate the lease agreements from the system, which is in our case, it goes to the mail ID and mobile of the customer. Customer has to put an mobile OTP or an Aadhaar OTP as the regulations allow, and the document is signed then and there. It comes back. The customer is ours. In between, if he has to pay some initial fees or deposits, he can pay through various platforms like UPI or a net banking. So I would definitely say it's a commendable effort, a commendable piece which has happened in the fintech space in last 2-3 years through UPI or other platforms. Even the government has been very supportive for these initiatives. Yes, when we say today we are 100% online, we could have been partially online and offline if these modes were not available today. Now customer is done, and now it's a choice. I have to make sure that the customer is going only to take the delivery of the vehicle. Otherwise, the process is not complete. So we allow the customer to choose the dealerships, as we have the national tie-ups with fossil vehicles and even the electric vehicles as well. Customer can directly go and take his bike, and he is happy. What customer is gaining here, this is a tech process, but as everybody is talking about, is he should have the ability to choose his monthly payments, wherein he doesn't have the option in a traditional bank finance plan. He only has the option to choose the tenure and the heavy EMIs he has to pay. Why should he pay heavy EMIs? When we say that these millennials keep on changing the cities, they can relocate. They should have an option to terminate these kind of contract, or maybe upgrade to another vehicles, or they can, anytime they are not able to continue with this kind of proposal with the minimum exit fee, they should be able to tell that, hey, look, I'm not able to continue, this is your vehicle, these were the terms. These kind of flexibilities are prominent. These are essential when we really talk about leasing. And the most important part, that when we say Auto is retail, we really want to make sure that there is no another institution comes in between. When I want to interact with the consumer, let the consumers come to our portal, decide what they want to do. Let there be no barriers when I'm giving a pan-India services. And in between, the most important part, how, as Mr. Gambhir also spoke very clearly on this topic, that we are taking the risk of the residual value. So how Auto is covering? So yes, we have our IoT platforms. We have designed that app system. It is well available with each and every customer. What it is also beneficial for the customer, because we do provide the use pattern. We do provide how rash he is driving, what are the other tips by which he can keep the health of the vehicle upkeep. So it is not only an app which would provide help to me. A bike lover, a bike user would also use it very prominently. It would also help me to justify a resale of this vehicle tomorrow. As we all know that the new two-wheeler purchase industry is so big, and so the second-hand vehicle industry is. We also want to entertain the second-hand vehicle two-wheeler leasing industry. There are gaps available like GST on used vehicle. So there are issues available, but yes, that's the view, that's the agenda, that's the dream. Two vehicles are there. One doesn't have a vehicle health history, and Otto's vehicle has a vehicle health history. So we all know that obviously I would be able to substantiate this data when I want to sell this product, in the market for a used vehicle. I believe these are the technology base what we have designed. Whatever we design, it's designed by our internal hardworking team inside. We have a view that we give a good report, we give a good security to our finance partners. So as Mr. Tambe, you had mentioned that we are also a fintech platform wherein our finance partners get associated with us, and we spread this affordable way of using the vehicle, instead of just making a permanent liability. And then as a customer, I really go in the second-hand market. Hey, look, I took a vehicle loan for 3 years, 4 years, and I'm transferred from Bombay to Pune. I don't know who to sell this vehicle. There is no prevalent second-hand sale market available. So I have to give solution. Until unless I could enter into any market, until unless I'm providing a solution which is relevant, no business can boom. And that's the reason in last 12 months span, we have reached to 4 to 5 cities, and there are reasons behind it. So I leave the panel with this note that yes, we want to grow, but what solution eventually we want to provide to the society is very, very important. And our motto is very clear that we want to become a tech-based platform. And the way millennials are using the technology, with the simple example of buying a smartphone, using a smartphone, why not a mobile? And end to end, it should be completely online. Then only it makes sense. Otherwise, there are starters and there are finishers. Thank you, everyone.
Thank you. Thanks, everyone. Santoshji, should we move to Q&A? Last 5-10 minutes.
Yeah, surely. I think there are a couple of questions from the participants, and some of them, Mr. Tambe, I have already shared in your WhatsApp. If you can please take them, take those questions.
Yeah. So let me start. Vinodji, 2 questions for you. One is in operating lease transactions, can a lessor repossess the equipment without a court order or a court intervention, because the master lease agreement clearly says that you are an owner, and if it is not paid, you can get the asset back? That's the question that I have from one of the participants.
Would you like to also say the second question?
Yeah. See, this entire fintech revolution which is happening, would the courts and the regulator appreciate and acknowledge e-signing and e-documents if the matters reach the court?
Right. Okay. Thanks. I think both the questions are very important. The second one is even more contemporary than the first one, but the first one also is quite important. Will a lessor under an operating lease be permitted to repossess the asset without a court order? Basically, a lease is a rental transaction. The lessee has the right of possessing and using the asset as long as the lessee satisfies the terms of the lease contract. When the lessee does not satisfy the terms of lease contract, the lessee's right to keep the asset gets terminated, which means now the asset is without any authority in the possession of the lessee. So if my asset is with somebody's possession or in somebody's possession without a valid right, I can always go and grab the asset. So basically the common law right that every owner of an asset has a right to recover or retrieve his asset without any intervention of a judicial authority is a basic right of ownership. And as Vandana madam was talking about in the case of airline leases as well, this right of a lessor to repossess asset has really been upheld. Technically, therefore, the answer is yes, the lessor can go and repossess the asset without a court intervention. But please understand that there are practicalities that you need to be aware of. For example, if you're walking into somebody's garage or somebody's house to pick up an asset, it's not going to be a happy journey. So please do understand that practically it might be sensible to have some kind of order or assistance to actually translate your right of possession into a reality. But technically, the law is in favor of the lessor. On the second question of whether e-signing of agreements is valid, validity of e-signing is hardly a question, because even an oral contract is a valid contract. I mean, you don't need a written contract for lots of transactions. So e-contracts are perfectly valid. And there have been several rulings of Supreme Court also that even attribution of a contract done on email is also a valid contract. Attribution is something which is defined and discussed in the Information Technology Act. Though these concepts are pretty complicated, but as such, India is largely in line with the League of Nations, which has actually recognized the validity of e-contracts. However, there are several nuances which probably may not be opportune today to get into those details. For example, what would happen to stamp duty in case of e-contracts? An e-contract is obviously completely in a soft format, and stamp duty is currently being paid in many states in hard format. So what happens to payment of stamp duty? Those nuances still remain, but as such, the validity of e-contracts is perfectly recognized.
Thank you. Our next question is for Vandana ji. Vandana ji, ground handling equipment plays a very important role. So shouldn't its leasing of ground handling be at par with the aircraft leasing, is the question that has come. Why is it treated differently than an aircraft leasing?
So here the question is a little simple to answer, because aircraft and engines are covered under the Cape Town Convention as far as aviation space is concerned, but no other equipment is covered under the Cape Town Conventions, which is the international convention. So everything else then comes under the domain of the domestic laws. And we've heard from everybody how difficult it has been in the last few years or a couple of decades to do that. I myself in my intervention had raised the issue that at the airports there are a huge number of critical equipment which are today being bought outright, and we need to explore whether leasing of such equipment, and ground handling equipment is an equipment you use at an airport. So it's not actually to provide airport services, but it comes in the same domain.
Thank you. One last question from my side. Santoshji, before I hand it over to you, one last question from my side to Ramanji. Ramanji, one question that has come is, how do credit rating agencies view a standard loan NBFC vis-a-vis a leasing company? Is it at par, favorable, not favorable? What has been the experience of credit rating agencies?
See, I don't think when it comes to credit rating, there is much kind of a distinction made by the rating agencies. I mean, whether to say that whether leasing companies are treated better or favorably or unfavorably, I don't think there has been much. I don't see much difference there, because there are some the issues with the rating agencies are slightly different, not much related to that. That's actually at least what we've seen in the past. Because as I said, we have had an era where almost the entire NBFC sector was only doing hire purchase, and today we have an era where almost the entire NBFC sector is doing loans against loan transactions. So we haven't seen changes to that extent. The issues with the rating agencies are different. So I don't think there is a much difference here.
Santoshji, up to you.
Yeah, I have a couple of questions, two questions indeed to Ms. Sarika ji. The question is how the India's financial statements of NBFCs are different from a normal India's compliant company. And another question is, what is the new provisioning model for NBFCs?
You said provisioning norms, right?
Yeah.
Okay. So to answer your first question, so the companies which are already covered under the Ind AS regime, MCA has already issued Division 3 of Schedule 3 for NBFCs to follow. So largely, if you see the format of Division 2 and Division 3 of Schedule 3, these are alike. But because of some nature changes between a normal Ind AS company and NBFC, the business thereof, there are automatically certain differences between a normal financial statement format which has been provided for normal companies and the companies which are under NBFC regime. So further, there are more flexibilities also provided, and they are specifically allowed to use, or they are rather mandated to use, any guidance and norms which are provided by their regulators. So they can very well change the format. That was to answer your first question. To answer your second question, ECL is the new model which is required to be applied by all the companies, including NBFCs, who are required to follow Ind AS. So earlier I was just studying one study some time back. So some company did some research about Ind AS compliant companies, which were specifically NBFCs. So there was a delta on the upper side up to the tune of 22%, where if they were using the earlier model and now they're using the ECL, so up to 22% additionally they had to provide the ECL provisioning. So ECL provisioning works on expected credit loss model, while so far NBFCs were working on incurred loss model. So there are different methods, largely three. And basic difference between the two is earlier only the loan transactions were covered. Now, apart from loan, even receivables and even offline balance sheets like guarantee, etc., are also covered, wherein expected credit loss model is to be applied and provisioning is required to be made. Yes, Santosh, over to you.
Thank you, Sarika ji. And just something from my own. I have an idea, but I'm just quoting here, mentioning here, without any religious kind of the sentiments. There is a saying that why to own a cow when the milk is so cheap? Though the milk is not so cheap. If you ask anybody, everybody would claim that milk is expensive now. But when you look at the in context of the leasing, this best suits to leasing industry. But so far as the acknowledgement and the awareness, education of the people to take the leasing as a product is concerned, I think that people are not aware about the leasing. They directly think or plan something in their day-to-day life as well, even if they are not considering the leasing of the assets for their business purposes. And somebody is going to buy some, procure some, car or something like that particular thing for their own personal uses. So they not consider that, lease as a product, but they consider they consider their, need, and they go for the loan as a product. So they go for loan and procure the asset. But leasing as a product, as Honorable Minister also mentioned here, I think that this needs to be educated enough entire in the public at large. And who should come forward? It's basically, to my mind, are the industry stakeholders who are the lessors, because they have direct interest over here. So my saying is that this ASSOCHAM platform is open for all the stakeholders who are in the industry. Use this platform, and we are there to reach out to the larger audience and convey that this leasing is as a product, and they should use it, and they should go for procuring of the assets, not through the directly loan, procuring first loan and then to go for buying the assets. But yes, of course, there is a possibility that where we can have the maximized outreach to the larger audience and they avail the product or equipments for their needs, and they allow the stakeholders to serve their purposes through the leasing as a product, to my mind. So this is just to add, and I'm very much thankful to the guests in the inaugural session. I am grateful to Madam Bandana Agrawal ji for taking your time out for addressing over here this program, and you spent a lot of time. As always, you have been grateful, and I'm thankful to Mr. Srirang Tambe ji for supporting us. We are thankful to Mr. Amit Dang ji. We are thankful to Mr. Vinod Kothari ji, Mr. Harivansh Kumawat, Raman Agrawal sir for being kind enough to guiding us for delivering this kind of the program as always. And Mr. Sandeep Gambhir ji, thank you so much for your kind support, being as a partner for this summit to all these sponsors, partners, Hiranandani Group of Companies, TCI, GSW, Origa Leasing, Srey Equipment Finance, Orix, Auto Capital, Bombay Stock Exchange, Brokers Forum, Mazars in India, Vinod Kothari Consultants, Primus Partners. Thank you so much, everyone out here to support this initiative. Also to Indian Railway Finance Corporation, they have supported us, and out for the outreach media partner for helping us and making this particular program to deliver. And I would request Madam Bandana Agarwal to please say a few words to close this as session chair, please.
So thank you so much to all the panelists. I have just 2 sentences to say. One to Sarika, please help us come out of the red that you showed aircraft leasing to be right on top with maximum red. And second is to Orix and to other lessors over here. We have shown that policy and regulatory changes have been made in aircraft leasing to enable it. There are many players who've taken the lead and gone for it. Orix, which is the 3rd largest lessor in the world, our full expectation is within 3 days you'll be here in India on aircraft leasing as a registered entity, not only as an outside lessor. I thank everybody in the panel, and I look forward to hearing more from you on this important subject in due course. And it can be done. Aircraft leasing, we showed it can be done. Thank you so much.
Thank you, ma'am.
Thank you, everybody.
Thanks, Vandana ji. Thanks a lot.
Thank you, everyone.
Thank you, everybody.
Thank you.
Thanks,
Thank you. Thank you. Thank you very much.
Thank you very much. Thank you so much, Raman sir.